Nifty also under pressure, down by about 0.3 odd percent. Let's try to pull up the Nifty 50 chart if we can and see how the chart is fared throughout the day. But before that, let's take a look at Nifty heat map as well. Trend stealing the show, up 5% almost. Aisha Motor on the back of earnings, up 2%. Nestle, ITC, Asian Paints, a lot of consumption names buzzing in trade today, and that's the reason as to why Nifty FMCG could also be one of the top gainers on the sectoral heat map as well. There's also Kotak Mahindra Bank, Bajaj Auto, Reliance seeing some gains, but clearly Sun Pharma under pressure on the back of earnings, down 5%. Dr. Reddy's, Cipla, a lot of pharma names under pressure. Dr. Reddy's down by about 4 odd percent, Cipla down 3 odd percent. Tata Steel also under pressure. Second day of pressure for Tata Steel as well. Infosys, Tata Motors, Maruti, Wipro all seeing a downtick of about 2 odd percent. Let's try to pull up the advanced decline ratio because that will tell us as to how the broader markets have fared. There you go. But that paints a better picture than the benchmark indices, because the gap has widened since the middle of the day, and there are 764 odd advances versus that of 1500 odd decline. So there's of course sellers market today, and the ratio is roughly 2:1. Let's also take a look at the sectoral heat map before I go on with the broader markets. The Nifty FMCG topping the chart, up 0.8%, although paired of gains a tad bit, but still trading higher. Nifty Media, Nifty Consumption doing well, but Nifty Pharma under pressure, down by about 3 odd percent. Nifty IT also is under some serious pressure, down by about 1.5%. Nifty Metal also seeing downtick of about 1.3 odd percent, and Nifty Defense continues to see profit booking. But how are the broader markets doing?
Well, suffice to say, you mentioned the advanced decline ratio, right? We should pull that one up. I mean, the mid caps are down about 0.5% and close to the low point of the day. I would reckon the small caps will be doing a similar thing as well. So let's pull up the advanced decline ratio of the market breadth, because we know that the indices broadly are at the lowest point of the day, and the market breadth is at the worst point of the day, if you will. So that's the first point to keep in mind. Now, the key takeaways from a market mood perspective: IT is corrected another 1.5%, and now it's down over 10% in the last 1 month alone. So that's the first thing you got to bear in mind from an index perspective. And retail stocks are buzzing on alternate days, finding favor. One day it's Avenue Supermarts, one day it's Trent, one day it's something else. Today it's Trent's turn with the 4.5% uptick that we've seen on this one as well. Individual pockets, the casualty of the day today, 17.5. You could also call it the stock of the day, and we're going to talk about it a bit later on. Weak quarter one, or weak commentary from IIFL Finance, but quarter one weakness for Symphony as well. And that stock saw a 2% downtick. Positive news flow is coming for Inox Wind and Suzlon. Suzlon has gotten an order as well, which is why the stock was up 7%. At 52-week highs, stocks like GVTND, Hitachi Energy, and Radico Khaitan, and some price volume buzzers, if we can get them up on the screen. Look at the kind of volume activity in all of these stocks which are moving up. Netweb, Indegene, TBO Tech, some pretty splendid moves. Anything else, Harsh, that you're spotting?
Well, PNB Housing is down 17.5%, so that one's in focus. I'll stick with the NBFC pack. You also have an IIFL Finance, which is down over 7%. Again, numbers, commentary, not exactly appealing, and that one also reeling under some bit of pressure. But it's not all negative, frankly. A couple of positive buzzers as well, just pulling those out. But yes, so broadly, you're seeing results reaction dominate at this point. Suzlon is up nearly 8%, and RHI Magnesita is up over 5.5 odd percent. So those are some buzzers on the positive side. Let's take it across to Ruchit, get a perspective from him with regard to how he's viewing the index. Ruchit, what next on the index? We're seeing pressure, of course, and this week hasn't been the best week for markets either. What next?
Yeah, hi, very good afternoon, Harsh. Very good afternoon to everyone. Well, what we have seen in last 1 month, the entire July series has been a corrective phase for the markets, where Nifty has corrected by about 1,000 points from the high that it made. Now, regarding this tariff news flows which are there's some more uncertainty, it seems, going ahead for the market. And frankly, markets does not like uncertainty. Even if the deal, whenever the deal will be done, whatever the tariff rates are, I think markets would discount in very soon and then start the next leg of momentum. But till then, till there is uncertainty, we don't expect the markets to show any kind of trended phase coming in the near term. So even if you look at the FI's long-short ratio, then the long-short ratio is just around 10%, means they're starting the series with 90% long-short, 90% positions on the short side. Although historically we have seen that these are short heavy positions which generally gets squared off or shorts get covered. But when you start the series with 90% itself, that does not necessarily mean that short covering would be done immediately, at the start of the series itself. We have seen times where the short heavy positions remain at similar levels, for a few days or maybe for a couple of weeks, and markets try to show some consolidation or trade with some negative bias just because of lack of buying interest, even though no fresh short formations are there. So, considering all these factors, we are of the opinion that the price-wise downside may be limited from here on because we have already seen a correction in last 1 month. But there are high chances of some time-wise correction getting continued, in the overall market. On the low side, 24,600 is the immediate support for the Nifty. If 24,600 breaks, then 24,450, 500 would be the next support zone where previous swing lows are there of last 4 to 5 months. So on the downside, we are watching these levels, but considering all the data points, we are of the opinion that until there is clarity on the tariff front, markets would go through a time-wise corrective phase where it would trade within a broad range. On pullback moves, it would face resistance towards 24,800, 25,000, whereas on the low side, 24,600, 24,450 would act as a support. So the momentum would clearly be missing, and some sideways price action is what we are anticipating.
Ruchit, hi, good afternoon. Any trade in Bank Nifty?
Yeah, hi, very good afternoon, Mahima. So overall, I think there's just a lack of leadership from many of the banking names, except one or two, which is ICICI Bank or HDFC Bank. But apart from, if you see, then the banking names are also not showing any such kinds of buying interest coming in. And the major support for the Bank Nifty index would come around 55,100 zone, which is still about 600 points low from current levels. So I think one should wait for such kind of correction. If we get index towards that 55,000, 55,100 range, then the stop losses would be smaller and the risk reward ratio would become favorable to take some contra trades there. So it just seems to be a corrective phase within an uptrend, but around 55,000, the risk reward ratio would become favorable to take contra buys there.
Ruchit, your picks for this afternoon, Ruchit?
So a couple of recommendations, one on the buy side and one on the sell side. On the buy side, we are recommending to go long on Asian Paints. So probably just looking for opportunities in such stocks where the stocks has not moved much in last few months, so that the risk reward ratio become favorable, and even if there is unwinding of positions, the chances of unwinding in such stocks are very low. So Asian Paints is one stock which technically is looking bullish. A rising channel has been seen, and the prices are trading near the lower end of the channel. So the downside seems to be limited from here on. Can be bought around current levels with stop loss below 2,400 for potential up move towards 2,480 to 2,500. And BPCL is one stock where we are recommending to go long, to go short in the future segment. Primarily, the stock has breached its 100 DMA supported in today's trading session with the formation of low top, low bottom structure. So this is one stock where we expect some more selling pressure to come in. With stop loss about 329, traders can go short in the future segment of BPCL for potential near-term targets around 304.
Ruchit, what about Suzlon, up 8% on the back of that order win? Just want to get a sense, if a trader wants to enter into a counter like Suzlon right now, is this the right time or should he wait?
So there's a good buying interest in such markets because of this news flows that we have seen. If you look at today's volume, then the volumes are much better than what we usually see on a daily basis. So this clearly indicates that irrespective of market moves, some relative outperformance could be continued in Suzlon. But yes, if you ask me for fresh buying entry after 8% up move and 2 and 3% up move, which was yesterday. So almost the stock is up 11 to 12% in just a couple of trading sessions. So I think one should look to enter in a staggered manner where maybe some quantity bought can be bought even at current levels, but keep some room to buy more only if we get dips, so that the risk reward ratio become favorable. On the lower side, 62 to 63 would be the good support, so that in case if we get any dip towards that range in the near future, then those would be good levels to go long on Suzlon.
Okay. Ruchit, what about trend? Up almost 5% as we speak, and I believe this is the consumption trend that's probably bucking up the stock. But any trade there? The earnings are yet to come, of course. But if you want to look at the technicals, what is the support and resistance that you're seeing?
So far the stock has been an underperformer in last few months. The recent pullback move also got sold into around 6,200, after which we have seen a sharp correction. So today, yes, definitely there has been an up move irrespective of markets correction, but it's more or less, I think, just because the momentum readings were oversold. So this can be taken just as a pullback move, no signs of trend reversal or any kind of no significant uptrend coming in. So a pullback move only, it seems. Resistance would be seen around 5,450 to 5,500. So maybe some more up move about 150, 200 rupees could be seen in the short term. But really no signs of no any kind of trended phase coming in and going ahead.
Richard, thanks for that, giving us your quick thoughts. We'll let you go on that note as we're joined in by management of City Union Bank at this hour. Management conversation. Mr. N. Kamakodi, who's the CEO at City Union Bank, joining us. So very strong performance, frankly. So let me give you credit with regard to Q1 FY26. 16% growth clip, YOY, 2% sequential. It's one of the stronger performances from some of the smaller banks. You believe that that's sustainable through FY26, the 16, 17, possibly even inching up to 18% kind of growth possible?
See, when we declared our results for the fourth quarter, we, like I said, we expect we will be having about maybe about 3% or so over and above the growth rate of the industry. So with that, we moved and we are able to have about 16% growth for the current level, and we are trying to push for that, sustain that level as we get into the year. But at the same time, like like say the focus is to ensure that we grow at least 3% over and above the growth rate of the industry, and but our endeavor will be to maintain the current level of 16%, whatever we have maintained currently.
So this 3% above industry, I would believe that's just a metric, because the underlying growth will come from the fact that whether growth opportunities for you are available or not. So, and whether in the right pockets or not. Where exactly are you looking to grow?
We have, like say, almost more than 80% of our portfolio mainly coming from the MSME, commercial trading activities, and agricultural loans, including the gold loan. They together constitute about 80 to 90% of our overall loan book. And our growth is broad-based, and we are able to see growth across segments. And in fact, rural credit using the Jol loan is particularly, like say, helping us to sustain our growth. The issue is, like as you started, there are multiple, like say, uncertainties. Like say, for example, in MSME, textile is a major sector for us. There, the tariff and all which are coming and all, even though they don't have anything at this point of time, there are, like say, for that 1 or 2% fluctuations, there are multiple, like say, the environment has to support us, but we are putting our best efforts to maximize our growth, and 15-16% looks to be reasonable, but we always need to have that, like say, cushion, particularly when we present to you, or probably the set the expectations probably for you all.
Point taken, sir, and always good. Under promise, over deliver. Sir, with regard to your credit costs, they've been in a quarter where some pockets have faced plenty of pressure. You're not seeing any of that. In fact, they've tapered off on a sequential basis. What's the trajectory and outlook like for FY26? Any concerns that you see in any specific pockets?
See, last financial year, we had about, let's say, close to 800 crores of overall slippages, and we hope the figures, whatever we see currently, they definitely we should have much, like say, lower than that figure is what we are expecting at this point of time. And in fact, even in yesterday con call, we clearly explained let's say, even though we hear from some of the other financial institutions that there are some amount of, let's say, stress building up, we don't see that. And at this point of time, all the matrices, be it SMA numbers and other related factors, whatever we see are pretty comfortable. And almost for more than 4-5 quarters, we could continuously see a situation where our recoveries from the NPAs are, like say, over and above the incremental slippages. So we feel, like say, based on the information whatever we have at this point of time, we should be able to have, like say, the better slippages and a better recovery for the current year compared to previous quarter is what previous financial year is what we expect at this point of time.
Mr. Kamakodi, Neeraj here, just one macro question. There's fair degree of chatter around whether this earnings season is an indication of the kind of growth that India Inc. can show, and thereby GDP growth can come in as well. And naturally, growth rates for banks will be, in some sense, a lever of what the GDP grows as well. How constructive are you for the rest of the year? Because frankly, if I look at the India Inc. numbers for Q1, they were maybe a tad bit lower than estimate and not a very exciting print on a consolidated basis. So just trying to understand, how do you think about it when you think of how much you can grow for the next 6 to 9 months? Because it will be, as I said, a lever of what the overall GDP growth is.
See, we are bankers for MSME, commercial trading, and agriculture and rural credit, having our significant presence in Tamil Nadu and a reasonable presence in the 4 southern states. Maybe, like say, extrapolating for the entire economy may not be, like say, probably okay. But at least what we feel, I just want to share with you. Say, we had a period, particularly post-COVID, particularly in the sectors, including MSME, which we are catering to. The discipline in using the bank credit has substantially increased. And people have, like say, very judicious in utilizing the credit, much better than what it used to be, say, 5 years back or 10 years back and things like that. And we faced post-COVID about 4 or 5 years where people were not going for incremental credit at all. But after many years, particularly, we could start seeing both inquiries and also some amount of investments. For example, particularly, we could clearly see a lot of MSMEs are going for solar so that they can take care of their power expenses and all. It is something similar to how this sector, particularly textile, invested in the like say, wind-based, like say, renewable energy sources about 15 years back, and we had a good amount of period which improves the efficiency for the units, like say, factories which are functioning on that. We are able to see some amount of incremental investments which are happening, which have started happening. And so there is the hope that, like say, the credit growth should improve is there. And one more thing, the investment cycle particularly starts picking up as any economist will say, when the capacity utilization of the economy crosses, say, 85% or so. Still, we are, like say, around 80 only, still some more, like say, distance to be crossed. So, but we hope this decreased interest rate scenario will activate the, like say, the businesses and particularly the manufacturing sector to go for incremental investments, and we should be seeing, like say, good progress as we move forward. And taking the learning from, like say, the after the atomic bomb, like say, the late 90s.
Right.
So I think the virulence in the particularly the manufacturing sector should improve as we move forward. And things are pretty stable and looks are promising.
Okay. Yeah. Okay. We'll leave it at that, sir. Thank you so much for taking the time out and being with us. Appreciate your time.
Yeah. Thank you.
Well, that's one word, in fact, and one more corporate word. In fact, as we hit that break, hear out this word, a short slice. of our exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One. We spoke to him inside a Tesla for the first of its kind interview discussing Teslanomics and Tesla's influence on Indian markets and the future. Of course, the whole show plays out at 6 p.m. today, but here's a sneak peek.
Tesla's India's entry has been 10 years in the making, and I'm sure by now you would have seen a lot of reviews on the car, its performance, etc. In this very special show, we're talking about the Tesla, we're talking about the economics of India that allows for a Tesla right now, the demand it could be seen, and why so much excitement about the EV space. But I'm not going to do this by myself. To help me really take you through Teslanomics, I have invited along on this shoot Mr. Dinesh Thakkar. All of you know him, of course, as the force behind Angel One, a veteran market voice. But I don't know how many of you know that he's a complete auto enthusiast and has a garage, which I think is everyone's envy. Thank you so much, Mr. Thakkar, for joining us.
Thank you very much. Thank you very much for this opportunity. As I also am a car enthusiast, so definitely I would really be very excited to drive this car with you and plus engage in markets and plus some talks on my car garage.
Yeah, so by the way, I don't know if you guys know, but he has McLarens, Porsches, and believes in performance over luxury. I think that is one thing that you're going to be looking for. Is this about style and how much of it is about performance?
See, for Tesla, I would say I would look at kind of like innovation, what they have brought in. Apart from being EV, I think this company innovates a lot. And we also being into a field where we believe innovation is going to create deep penetration. So that is a common element what I am looking at Tesla. Tesla is nothing but a computer on wheels. So that way I would say it's more than a car.
You know, the biggest test, at least for any car company and even for a Tesla, is grappling with Mumbai roads. So let's see how that goes. All right, we're starting off our drive, and as has been explained to us, first of all, are you excited?
Yeah, definitely. Very excited.
I promise to drive as well as I can. Thank you. Thank you.
I fully trust you.
So the way this works is pretty interesting. So I have to, everything is on this screen. There's pretty much nothing here in the center of the car. It's very different from what you see. Nothing around the steering wheel. Everything is from the screen. Now, that can be, I think, excellent if once you get used to it. Perhaps right in the beginning, it'll take some getting used to, because that's not how other cars usually work. So here we go. All right. And we're off. So you know what's exciting about this, Dinesh? I feel that the way they've made this so intuitive. I want to start the conversation talking a bit about Tesla, and the whole concept of this conversation, of course, with Dinesh Thakkar, has been to talk about Teslanomics. Has Tesla's time come in India? We've been waiting for this for at least a decade now. By the time it has come, there are other competitors, but Tesla still has that brand value. So some of your thoughts on that. First, Mr. Thakkar, considering that you are truly a car lover and you believe in performance over luxury.
See, Tamanna, what I see is that Tesla is a company who really innovated and built all their cars from grassroots level as an EV. So technology what they are using is purely thought based on how EV should function, how EV should look like. So you look at all the functions like over here, everything is on the dashboard, which unlike EVs that we see, which are converts from internal combustion engine to this, they are more luxurious car where all the software is fitted. This I am feeling as if it is a computer on wheels. So everything is like so well kind of like designed and so user friendly, and that is really, this is first time I'm sitting as close to steering wheel as I can sit. So I can see all these functions, and that excites me.
Are you pointing out to the fact that I've pulled my seat really up front so that my legs can reach? So you know, when we're talking about Teslanomics, and we spoke a fair bit about the car, I want to link it to and get your view on this consumption boom in India. This is something which I think even market has been betting on since budget this year, because these tax cuts came in. The premiumization theme has been there in Indian markets, in the economy for quite some time. How do you see this product and this launch in that bigger picture? Just as an example, there's a real estate developer who's come into Mumbai for the second time, a Delhi-based developer who's starting apartments at 6.5 crores. So those are the same guys who are going to come out and buy cars like this, isn't it?
Yeah, I think India, in terms of being aspirational and being a big consumption story, still, I think the story has just begun. If you look at current, our per capita income would be average around US 2,800 something, and we have seen big kind of consumption story play out when per capita income goes to 5,000 and 10,000, which is just maybe 5 to 10 years away. So I feel that brands like this, who are thinking about being in India and capture this big consumption story, they have to look at next 25 years. They have to look at Viksit Bharat year 2047. And if you look at this category of HNI, what we call, or emerging HNI, who are earning between 50 lakh to 1 crore, that population is growing at the rate of 14 to 15%. So that is the fastest growth across the globe. And brands like Tesla, who are really trustworthy, who can really bank big on this consumption story, they should take serious view about next 10, 20 years rather than taking kind of a short-term view. So I believe this consumption story and aspirational story of India has played out well, and it is a beginning, I would say.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint.
India market closed right here on NDTV Profit, and but the markets have come off in the broader end of the spectrum, particularly so. Just want to mark the UPL numbers. Very good set of numbers. Graphite India pieces are out as well, and unlike HEG, there is some things disappointed the street on graphite, and that stock is down 7%. Some expansion plans, 600 crores for graphite electrodes capacity addition. But anybody who looks at this industry very closely will tell you it's a process of bottoming out. So I don't know if this weakness will get bought into or no, but keep an eye out for Graphite India. But UPL, the numbers looked rock solid. Revenues were up 1.6%, which is fine. But I think the operational performance probably a lot better. And we'll get in Varsha in moments from now to talk about this. But while we wait for Varsha to come in, as you can see, the net loss has narrowed too. While we wait for Varsha to come in, let's get in my colleague Sumit Sarkar to talk about what is it that the dealing rooms are talking about today. Sumit, thanks for joining. And I don't know if the dealing room spoke about PNB housing at all or no, but independent of that, what is it that you're learning?
Well, PNB housing, there was no chatter on the street.
No chatter.
And no chatter at all. And what some analysts are telling is that he might be going back to Carlyle and not joining any other firm.
Girish Kausgi.
Yeah.
Okay.
So we still do not know this. This is also not confirmed as such. This is what the indication is. So yeah, that's what we have on his exit. But other stocks that remain in focus, firstly it's Jubilant Pharma One. Dealers indicate that smart investors have started to accumulate this counter. The stock is down today in trade owing to the additional Trump tariffs on Canada. But they understand, but some dealers are indicating that Jubilant Pharma products are exempted under the existing United States, Mexico and Canada agreement trade treaty. So there won't be any impact on Jubilant Pharma is what their understanding is. For Federal Bank and ABB, dealers are indicating that there are sell flows on large HNI desk ahead of the Q1 numbers. Now for ABB specifically, do remember that on Monday morning the parent company will also report the numbers. For City Union Bank, sell flows are seen at higher levels on the DI desk on valuation concerns. If you look off late, the stock has outperformed the Nifty Bank Index quite sharply. For Paytm, there's a buzz of a potential block deal that could happen soon. The timing and the seller is not known yet, but this is what the dealing room is understanding. But this could well be a cleanup trade is what dealers are indicating. For SBI, dealers are expecting some passive flows that could come in going forward post the QIP that the bank has done. And for KP Energy, there are buy flows on large HNI desk in trade today. So keep an eye out for KP Energy as well.
Interesting. Okay. The stock is, of course, down in the session today, but some interesting names out there. Sumit, suffice to say that with the market activity the way it is, the excitement around hints for ideas and the movement that happens in stocks has come off a little bit in the last 2-3 days?
Well, yes, it has come off a little bit because given the fact that volatility has increased much, making money is not that easy right now in the market is what people are saying. Hence, not much ideas are coming into the market as of now.
Yeah, most certainly, because I hear from a lot of people that somehow a lot of smart money also at times is trapped. I don't think too many people anticipated the swiftness of the corrective move. I don't think too many people anticipated that there will not be a resolution around the trade deal before the August 1st deadline as well. I mean, we might still have a resolution because there is, I think, August 7th, due to procedural reasons, it's been the 25% tariff has been extended to August 7th. But let's wait and watch how this shapes up. Let's pose those questions, by the way, to Kunal Shah of Mirae Asset Sharekhan. He joins in to talk about the charts and the derivatives. Avinash Goroshekar on the fundamentals. Gentlemen, both of you, thank you so much for taking the time out. Kunal, let's start off with you. How weak is it looking, particularly for the broader end of the spectrum currently?
Good afternoon, Neeraj. I think definitely if you look at this, the last week when we had met, our view was still the same, that the index, Nifty specifically, is trading in a downtrend where lower top, lower bottoms were there. Until the time we don't surpass the 20 DMA, the trend doesn't change. So I think bounces is utilized as an opportunity to initiate sell. Yes, yesterday was the case where there was a monthly expiry, and that is where we saw some momentum from the lower levels. But overall, the structure still remains on the weaker side. So our lower end target for the Nifty has been 24,450 is what we are targeting for the Nifty indices on the downside. So that is where we expect further correction coming in. Any intraday bounce should be a selling opportunity. For the Bank Nifty indices, here it is trading in a broader range where 56,500 is the resistance and 55,500 is the support. But within this range, again, for the bias continues to be on the negative side, even for the Bank Nifty indices. And once we break 55,500, we will see some aggressive selling pressure towards 55,000, 54,800 levels on the downside. So Bank Nifty also bounces. What you get should be an exit opportunity. On the higher end, the resistance for the Bank Nifty is placed at 56,500. So till the time that is not taken out, the view remains negative. Utilize bounces to again sell the indices.
Kunal, what about your picks for the day?
So I think in this volatile markets where we are seeing the broader market specifically getting corrected a lot. So there are a couple of stocks. One is on the buy side, one is on the sell side. The sell side is on the IT space. So I think IT still has correction left. And your persistence is the stock which is there on my radar. A consolidation breakdown is what we are expecting. 5,200 should be a stop loss on the downside. I am expecting targets of 5,000 to 4,900 on the downside. So that will be the first stock which will be there on the sell side. Second is on the buy side, and that is JK Cement. I think the structure is looking good on the chart. There is a upward consolidation breakout in the stock. There has been decent volumes in today's trading session, and we expect this move to continue on the higher end. So one can buy JK Cement with a stop loss of 6,600 and looking for the targets of 6,900 to 7,000 on the upside.
Okay, Avinash, hi, good afternoon. If you've had the chance to look at UPL, prima facie the numbers seems to be good. Losses have narrowed significantly. EBITDA has seen a good uptick. Any reading there? How are you picking that up?
Yeah, I think my guess is numbers have been operationally quite good. In fact, I think just like all agro companies, the operating EBITDA has improved quite significantly. And I think the second quarter also should be equally stronger or much better because, typically most of the agro companies, the first half is supposed to be a very remunerative period for them. So my sense is that the second quarter could be much better. And in fact, they're not going to be that badly impacted even by the US tariffs. So largely a domestic driven theme kind of stock. And with agrochemical sector now again getting back into proper balance because we have seen all the remaining larger companies like Rallis, Sharda Cropchem putting up very strong numbers. I'm quite sure that this number will be much better. And I think you will probably get to know better from the management commentary, once the Q1 numbers are, announced and the con-call commentary is heard. But overall, I think numbers are much better. I think my sense is second quarter, we'll have to wait for the numbers to be more stronger. But this quarter has been a good improvement compared to the previous quarter last year.
Okay, so that's with regards to where UPL stands. But clearly, the stock of the day today is PNG Housing and shares. I mean, let's try to pull that chart up, down by about 17% in trade today, and this is because of management exit. Harsh joins us with more details on what's happening with the company.
Well, yeah, it's a big name exit, and that is evident from the stock price action as well. Over the last 3 years, PNB Housing has gone through considerable amount of pain and now has seemingly done much better under the stewardship of Girish Kousgi. So just to kind of highlight the numbers, look at the GNPA number. This is the GNPA number before him, which is FY22 and currently. So yes, there was already a large part of the pain which was behind when Mr. Kousgi took over, but the recovery is what is really worthy of underlining. So that's the one of the 3 to 4 metrics which we'll highlight. That's the NNPA ratio coming down from 5% to sub 0.7%. The ROA metrics improved dramatically from 1.2 odd percent to over 2.5%, and that has remained quite steady as well, which is what is aiding a large part of the recovery even in the stock price. And the margins, which were at around 2.8%, rose to 3.7% as there was a large loan mix shift towards higher yielding affordable housing finance, which Girish Kousgi made. Now, talking about some of the strategy and commentary, which has been the case maybe over the last couple of years and which has been quite steady in terms of commentary, no major changes. They are tilting towards the better yielding affordable housing finance book, and they're growing that rapidly. They're focusing more on asset quality and bettering that, so the NPA ratios have come off, as is evident. Recoveries are likely to aid the numbers even for FY26. Credit cost thereafter is expected to stabilize around the 0.25 to 0.3% mark, and FY27 onwards, margins will actually kick in to ensure that the negative credit cost that's getting built in over FY25 and 26 gets leveled off with an increased margin. So all of those factors likely to play out. Now, why is the street worried? Unexpected exit, of course, it's a big exit and it's very, very unexpected. He's been driving the strategy at the housing finance company. Who replaces Mr. Kousgi is going to be the next big question. Can commentary and performance parameters hold in his absence as well? Does that really stand? And there are a couple of private equity funds as well which have been consistent sellers, something like a Carlyle, a General Atlantic. Those have been consistent sellers. So the real question is the best behind? The company though, and this is Morgan Stanley's view, has returned to growth mode with a sustainable and profitable strategy under his leadership, is what Morgan Stanley says. Also, they say that Kousgi has reshaped the strategy of the company towards a more diversified retail company. And last off, they also say there are 13 buys, 1 hold and no sells, with a target price of 1219 with a 50% upside as of right now. That's what the average Bloomberg analyst poll seems to indicate. Let's go across. We spoke to the management of PNB, which owns 28% in PNB Housing Finance. Here's what they had to say about the exit.
Put up his paper yesterday, and because of the family reasons, he wanted to move to Bangalore. That is the only reason for which he has put up his paper. Nothing more than that we should read in that. And he has put up the paper in the NRC yesterday, and the board also, they have discussed the PNB Housing, PNB HFL. And they have seized the matter now, and they are engaging the HR firm for finding out the new CEO for the company. More than that, nothing is there to read in this entire episode. This is one of the subsidiaries of PNB. We have 28% equity share in this company. And we have firm belief that company is doing well and will continue to do well. We don't have any concern about it. And that is the reason, if you see our shareholding, we have not diluted even a single percentage share in this particular company for the last many years.
Well, certainly under pressure today, and you have to admit, I mean, Girish Kousgi also carried with him that reputation, and I think which is why this 18% downtick. The question only is that, is it overdone or can there be more? Now, actually, you know, PNB Housing is one, but there are a clutch of NBFCs under some bit of action today and the last 2-3 days, Kunal, if I can come to you, because we asked Avinash about PNB, so I'm going to come to you. PNB Housing is one, yes, but IIFL Finance, because of that credit guidance, has taken a bit of a step back today. There is also, there was also some fairly positive commentary, by the way, on stocks like Piramal Enterprises a couple of days ago. How do some of these look on the charts?
I think the entire NBFC as a space is looking extremely weak on the chart. The Nifty Financial Service Index, that is one thing which looks weak, and we expect further correction on the downside. Firstly, I'll talk about the index, which is currently trading at 28,400 mark, and there has been strong resistance at 28,800. So we expect this correction to go further on the downside, and from the current levels, there is still 1,000 points downside left for the index. So if you look at the index till the 1,000 points downside left, the stock will correct even further. So here my negative view firstly is on Chola Finance. I think Chola Finance, if you look on the larger term chart, there has been a clear-cut negative divergence on technicals, and the confirmation has already been received where the stock has breached the 200 DMA. So clearly a change in trend for the stock. 1500 is a strong resistance on the upside. The risk to reward ratio is extremely favorable to go on the short side. Any bounce would be an opportunity to exit, and you can expect further lower levels towards the mark of 1250, 1200 in the very short term. So currently trading at 1425. 1500, that's the 75 point on the upside is a stop loss, and on the downside you can expect at least minimum 1200 to 1150 on the downside in the August series only.
Okay, Avinash, I'll come to you on these retailers. In the start of the show, we were talking about how different retailers are buzzing on different days, and Trent is one of the top gainers on the Nifty today. Your view on how you are anticipating the results to be, and I mean, if you were to pick amongst the pack of these retailers, which one would that be?
So I think this quarter number, from the retailing companies could be a little softer quarter, but I think within that, I think Trent looks more decent and more well positioned. We are not very comfortable on the valuations of DMart because we feel that earnings growth has yet got to kick in a big way. Typically, I would say that you need to look at maybe the post second half of this financial year. Probably that would be a period to actually look at how consumption has actually taken off, what has been the kind of buying across categories. But I think Trend can definitely surprise markets if they do record a decent growth. I think the previous quarter was a very challenging quarter for them. So my sense is that this quarter also should be a mixed quarter, not a very great quarter, but at the same time slightly better than the March quarter. So I think we'll like to keep Trend as our top pick here because we are structurally positive, and any decline would be an opportunity. We have been telling our clients to buy this stock on decline. Typically, I think one bad quarter doesn't mean that the business is out and the earnings growth story is gone. But typically, I think the second half of this financial year will be much better. So I think second quarter and the first quarter may not be all that great. So we are keeping our positions tight, and we'll look at the management commentary and the data metrics which come out.
Okay, UPL is the other one that is in focus right now, and UPL's numbers are out. In fact, let me go across to Varsha, who's joining in for more details. On the face of it, net loss has actually reduced from 384 crores to 88 crores. EBITDA has gone up 14%. Margins have also gone up. So at least an improvement in margins, even though revenues stay pretty much flat, Varsha.
Yes, absolutely. Even I would say the revenue is in line, while when it comes to net profit, rather net loss, I would say. So expectations were around 250 to 280 crores of net loss, but the net loss came at around 88 crores. So I would say in that kind of thing they've beaten, and that's the reason we have seen little recovery when it comes to stock price. But let me talk about the key takeaways when it comes to Q1 earnings. The revenue growth has been driven by improved pricing, supported by favorable product mix and double-digit growth in their subsidiaries, which is Adventa, which was again led by volume and pricing. The margin that you're seeing, the expansion in margin is led by improved product mix, higher capacity utilization and lower input costs, which drove overall EBITDA margin. Also, if you see the net profit, rather net loss, which has came down. This is on the back of higher other income, number one, lower cost of material, and of course the foreign exchange gain that the company has seen. Onto the guidance, so their guidance remain unchanged at 4 to 8% when it comes to revenue growth, with EBITDA guidance remain unchanged at 10 to 14%. So overall, so revenues were in line, but overall the numbers have beaten estimates, and the net profit, rather the net loss decrease that you're seeing is on the back of foreign exchange gain and of course the other income that the company has seen.
Okay, so UPL seemed like a decent set of numbers with some pressure coming in there. Avinash Gorakshakar, very good evening. Good afternoon, I feels like an evening, almost Friday there. So that mood coming in. But are you seeing anything positive there in the UPL numbers?
No, I think earlier, Tamanna, I commented that numbers have been much better than the street expectations. And I think the entire agrochemical sector is getting re-rated. So I think despite the fact that net loss number has come in, it's a significant reduction. The operating EBITDA has also improved significantly. And I think, the second quarter is also going to be a very strong quarter because typically most of the agro companies, have the first 6 months as one of their most remunerative periods. So I think the July to September quarter also would be a quarter to watch out for. And hopefully in this quarter, the company could bounce back to the black. So we are structurally positive here. I think any dip today which we have seen in the stock should be used as an opportunity to accumulate. Because our sense is that this year agrochemical companies could outperform significantly as compared to last year. And UPL has a large market share, does not get very badly impacted by the US tariff issue. So to that extent, I think, earnings growth this year should be much better. So we are structurally positive. I think even at these levels, a small accumulation at the current levels definitely could be advisable.
Accumulation at the current levels could be advisable. Let's get a technical view on that as well. Do you agree with this?
I think, yeah, definitely. Overall, if you look at the larger term trend for UPL, that has been positive. And now the important critical support levels for the stock on the downside will be placed at the 100-day moving average, which is at 655. So I think 655, 660 could be a very good zone where one can add again on the long side. And you can expect again further higher levels of 720 to 760 coming forward in the next 1 to 2 months. So I think wait for that dip. 6 on the downside towards the 100 DMA, 655, 650 could be a good level to enter on the long side.
Okay, stay on. Let's talk about a very interesting comparison today. So Swiggy posted numbers yesterday, and you already have so much of focus on an eternal. So of course, Zomato's Zoom has been aided by its dominant quick commerce arm, but we also saw Swiggy move ahead in quick commerce in terms of volumes. Of course, there were losses that were coming in. Mahima is joining us for a comparison. Mahima, you're calling it the big cook-off.
Well, yeah, so I think it's because they've given this header because Swiggy has managed to do well in terms of where the food delivery aspect stands. Let's try to pull that up. But before I go on to that, earnings per se, how it panned out for the two competitors. For Zomato, revenue growth was better than expectations and losses narrowed overall sequentially in its quick commerce business. And that was kind of the reason why investors were happy with the counter, and we saw an uptick in the stock for 2 days straight. Swiggy on the other side, revenue was better than estimates, but PAT and EBITDA losses both widened sequentially as well as year on year, and that is something that the street is not appreciated, and that's why we're seeing the kind of pressure the stock is seeing today. In terms of the overall metrics in the food delivery business, gross order value. Of course, in the food delivery business, Swiggy has managed to outperform Zomato in terms of the overall revenue growth. But in terms of operational metrics, gross order value for Zomato is higher than that of Swiggy at 10,700 odd crores versus that of 8,000 odd crores for Swiggy. The GOV growth has been better for Swiggy, 19% this quarter on YOY basis and 16% for Zomato. Take rates have also been better for Swiggy at 25.7 odd percent versus that of 24.7 odd percent. So percent difference there. The monthly transacting users, of course, is higher in Zomato at 20.3 million versus that of 16.3 million. So Zomato has managed to have more monthly transacting users in this case. But in terms of the quick commerce space, that is your Instamart versus Blinkit, gross order value, of course, in the quick commerce game, Zomato still is ahead of Swiggy, and probably 2 or 3 odd quarters analysts suggest is ahead of Swiggy right now. The gross order value at 11,800 crores for Blinkit versus that of 5,600 crores for Instamart, so less than half when it comes to the gross order value. GOV growth, that is your gross order value growth at 21% for Swiggy, but much higher at 25% in something like a Blinkit. Take rates have been again far better in Zomato at 20.3%, that is your Blinkit, and versus 15% in Swiggy Instamart. And monthly transacting users, however, are better for Swiggy, and this is because they have an integrated app, but around 7.6 million for Blinkit. In terms of the overall cash balance, now Zomato has been sitting on a huge cash pile of around 18,800 crores, and Swiggy is sitting on a cash pile of around 5,300 crores. But Swiggy has gone ahead and said that they'll now be cautious in terms of dark store additions, and that will aid their cash balance overall. Dark store guidance, Blinkit has gone ahead and said that they'll do 2,000 dark stores by the end of 2025. So that guidance remains unchanged. But Swiggy has said that dark stores have now peaked out for them. Going ahead, Blinkit says there's visibility of 3,000 dark stores once the 2,000 dark stores it achieves by the end of 2025, and it will add for Instamart, that is Swiggy Instamart, they've said that now going forward they will add dark stores only as per where the demand is, plus they need to be 100% operational and need basis. Lastly, in terms of what brokerages are penciling in, Macquarie is the bearish one here in both of the counters, where it's given underperform for both of these counters. 150 is the target price for Zomato and 260 is the target price for Swiggy. But Jefferies and Citi both maintain buy on both of these counters. Jefferies has a 400 target price for Zomato. Lastly, in terms of what analyst recommendations are as per Bloomberg, there are 28 buy calls and 4 sell calls for Swiggy with a return potential of 31%, much higher than that of Swiggy, which is at 11% return potential, and there are 19 buys, 3 hold and 3 sell calls when it comes to Swiggy. In fact, we spoke to the management of Swiggy to understand as to what are their internal expectations of turning EBITDA positive. Listen to what he had to say.
Yeah, so specifically on the EBITDA for the corporate side, while on the food delivery business, we have given the guidance that, over the medium term, you should expect a 5% positive, on the gross order value. On the quick commerce side, we want to make certain calibrated investments. So the guidance currently is only on the contribution margin line. We do not want to right now box ourselves on the EBITDA side, considering that the category itself is seeing pretty heightened levels of growth, as well as new players coming in and marketing investments that need to be supported to make up and to support the 100% plus growth that we are seeing. So we want to make keep ourselves the flexibility to be able to continue to invest for growth in this segment.
Okay. I just want to get a quick view here on the Eternal versus Swiggy debate that we've been having. Avinash, you want to come in on this first?
Yeah, Tamanna, I think clearly Swiggy is catching up, but I think, if you look at the performance of Zomato, that is Eternal, I think they are a tad better than Swiggy, and I think, the markets are also more comfortable and convinced on the business model with Eternal. Clearly, Swiggy still continues to record EBITDA losses, and most importantly, I think at least for the next 2 to 3 quarters, the segment in which they operate is going to see a lot of heightened competition. So, I think volumes may go up, but at the cost of margins. So we have been telling our clients that Eternal would be a better choice if one were to take a bet on this segment. And I think in any case, these are bets which investors need to take for the next at least 18 to 24 months, because before that, it's very unlikely to see very big kind of improvements on a quarter to quarter kind of level basis. So I would say that at the current levels, Eternal looks pretty attractive from a long-term horizon. Swiggy will have to wait for at least maybe a couple of quarters before we see some improvements on the EBITDA and the cash flow.
What about you, Kunal?
Yeah, I think for Swiggy, I think here the stock on the technical charts have already given us a rising trend line breakdown. So the chart is weak. You can expect further downside. I think any bounce could be a good opportunity to exit. You can expect further lower levels on the downside towards 380. Which is the next support zone, and once that is taken out, you can expect even 340, 330 coming in.
Okay. All right. We'll ask Kunal a little more about his BT/ST ideas, but that's after a very short break. Stay tuned.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam. Welcome back. You're watching India Market Close. Amar Dev Singh joining in. He's Senior Vice President Research at Angel One. Amar, very good afternoon to you. I want your BTST ideas first, but will we start? Let's start actually with how you're seeing the Nifty right now. It's taken a bit of a dive in the last hour or so, not holding up at all.
Yeah, I would say that if you look at the markets, I've been saying that for quite some time that overall the trend from a short-term perspective remains negative, and some of the technical indicators are extremely negative, and that's what we are seeing today also. So Nifty is inching towards a crucial zone of support, that's 24,400, but that also is likely to be tested. If it holds that level, then we could say that we could witness a pullback. But yes, a short-term top definitely has been formed in the markets, which I had spoken earlier also, 25,000 25,200. Now, the important level to watch out for is 24,400, 500 zone. If that is taken out, then we are headed towards 24,000, 24,200 levels, because the short-term technical indicators are extremely weak. The only, I would say, positive aspect is that the intermediate-term trend remains positive, and since we are approaching crucial support zone, so we could witness a pullback from the current levels.
Okay. Aman, hi. Very good afternoon to you. What about your picks for the day? What would you go ahead and buy, or are you selling something?
No, I would say that if I look at the markets, there are a couple of stocks which are definitely worth paying attention, and one is from the paint space, and that is Kansai Nerolac. So if I look at this stock, the stock has corrected from almost, I would say it has witnessed significant correction from almost 270 levels, and it seems to have formed a very strong base on the weekly charts. The monthly charts, it's showing some signs of momentum, and on the daily charts also we are seeing some positive momentum there. So this is one stock one can look at from a short-term perspective. The levels to enter is the current level with a stop loss of 237 and a target of 269 on the upside. And the second stock to look at is Emami Limited. This is one stock which has been in for consolidation for quite some time. We are seeing some positive momentum in the last few days. The stock is up by more than 10%. And it seems to have reached a crucial zone of resistance, somewhere around 600, 610 levels. So this is one stock one can look at, buying at the current levels for an upside target of 653 and a stop loss of 597.
Okay, now it's time for our bull and bear segment, and the stock in focus today is Sun Pharma. The stock is down almost 4% as we speak. There you go, 4.5%, and this is on the back of its earnings. We have Varsha joining us with what's worked and what's not worked this quarter.
Yeah, thank you so much for that. One main reason why the stock is down is because of, President Trump threat on lowering the prescription drug prices, and Sun Pharma's specialty portfolio will actually get impacted due to this. But let me start with the Q1 earnings and the bull case for Sun Pharma. If you see, its Q1 FY26 revenues were broadly in line with the estimates, while EBITDA growth was superb for the company, and this was driven by strong double-digit growth in its core India business and rest of the world business. But President Trump's aggressive demand for pharmaceutical companies to lower US drug prices to match the global prices poses a significant threat to the Sun Pharma specialty portfolio, because one of its drug, which is Ilumya, which is a key drug for treating cirrhosis, generates almost 10% of overall revenue, and in fact in the US prices reportedly 4x higher than other developed countries, making it higher vulnerable to overall portfolio, and this is one of the reasons why Sun Pharma is down 5% in trade today. But on the flip side, despite the pricing pressure in US generics, if you see, Sun Pharma's successful expansion in gross margin has actually led to positive things over the company. Now this was achieved through effective raw material through raw material cost reduction, and of course the product mix change that the company has seen, and that's the reason why EBITDA was a company did beat its EBITDA estimates. But if Trump demands for price parity are enforced, the lowering of Ilumya's US prices will hugely impact Sun Pharma's earnings, and because this Ilumya contributes almost 50% to the specialty portfolio of Sun Pharma, and this is a very big threat when it comes to overall specialty portfolio, because specialty portfolio is the next leg of growth when it comes to Sun Pharma. But on the advantage side, Sun Pharma has launched two products which are the positive one for the company and which will drive future growth for the company. One is Lexelvi, and the other one is Unloxit, which is on track for second half of this year. And this new specialty products are expected to ramp up commercially and will significantly significantly aid net profits for the company. But near-term headwinds and EPS cuts are the one of the disadvantages that the company has, because company acknowledges near-term headwinds including higher R&D expenses and rising effective tax rate is also one of the reasons why the net profit was down 20% for Sun Pharma, and these factors have already led to minor EPS cut when it comes to analyst projections. But a company do have strong long-term growth drivers and the strategic focus when it comes to their US portfolio, their specialty business, and overall portfolio that the company has on the back of the two specialty products that the company has launched, and of course the inorganic expansion that the company is doing. And lastly, the tariff, the uncertainty in tariff is the bear case that the company has because of the 25 to 30% of portfolio of Sun Pharma, which is concentrated on the US business. But on to that, in fact we spoke to CFO of the company, Jayashree Sadgopan, about the company's outlook when it comes to FY26 and 27. Do listen in.
The company, as you rightly mentioned, has performed well, and we have seen a good EBITDA growth. We had two exceptional items or one-timers for this quarter. One is relating to SCD-044. The trials were done and the product has been discontinued. The other one relates to GXMDL, which is a case that has been going on for many years in the past, and the company has reached on settlement, which was about $200 million. Net of the provisions that had been earlier considered in the books, we had to take a one-time accounting for both these exceptional items.
So a one-time hit is what they're talking about, but clearly the street has reacted negatively. My question is the worst over? Already a 5% drop today through the day. Amardev Singh, is a rebound in place for Sun Pharma? And actually, before you talk about Sun Pharma, just let me pull up the Nifty. And in the last 20 minutes, the deepening of the red on the Nifty is something that we should address. Down about 1% now, 230 points. Something is going on here and it's not looking very good. Let me pull up the advanced decline ratio while we're at it. The small cap and the mid cap, is it deepening in the broader markets? The advanced decline ratio is also widened towards the declines, getting more negative there. The broader markets also hurting, 1.5% nearly down on the Nifty mid cap 150. The small cap 250, more than 1.5% down at this point.
There is also, I think global markets are not looking pleasant. So Europe, the stock market sell-off, as they call it, is intensified. Stocks Europe 600 is down 1.3%. DAX, in fact, is down 1.7%. And so that is the German market is down about 1.7%. But FTSE 2, which is the UK market, down 0.5%. CAC, which is the French market, down about 1.8%. So it's not looking good there. And the US futures too have slipped ahead of the big jobs report. So this whole thing, right? I mean, while there is to and fro, 39% tariffs on Switzerland and what's happening there, I think it is certainly making traders a bit nervous. I wonder, Amar, if you have a call, I mean, if there is a shorting opportunity on the Nifty, it's very close to that support zone, right? Would you go out and short it here for a Monday trade?
I would say if we see, it would be, I wouldn't say at the current levels is a good level to short because I've been saying that 24,400, 500, that's a very important zone of support. So we could witness a pullback, but again, it's more of a sell on rallies in the market. That's what I've been saying for quite some time because some of the technical indicators from a short-term perspective, they are extremely negative. That's the reason we are seeing this selling pressure, and it continues to remain so in the lack of, I would say, in the absence of any positive, significant positive major triggers. I would say be on the sell side. If someone is short, one can hold on to it. Breaching 24,400, then we could witness some sharp correction towards 24,000 levels as well.
Here's what I think is possibly happening. The decision and the sudden release on 10 to 40% tariffs was a little before midnight in the United States. Basically, they've released this and I think Trump went to bed. The world has now woken up. Europe, you would have seen that reaction. That's why afternoon-wise, if you pull up the intraday chart, once Europe is woken up, you're seeing that shock deepen. and you're probably seeing some global market selling or foreign investor selling coming in now towards the end, because what he's done is actually very confusing. When you say 40% on transshipments, what do you mean by transshipments? The world trades in that way. It's not as if everything goes from point A to point B. There is value add along the way. So what comes in the purview of transshipments now becomes panicky.
Yeah, I think what would have rattled Donald Trump is that despite all the pressures and the tariffs that were there, Chinese exports for the month of June, when there was a pause but at higher tariffs, were up about 4%. Right, and therefore some of them made their way into the US despite the fact that they ideally should have been under a higher tariff regime, if you will. So I think there are a lot of moving parts, but I take on board that completely, because a lot of it is very, very fluid. It's very difficult to pin it down, and maybe people are just taking that ahead of the weekend and ahead of the jobs report in the US.
Okay, let's take money off. Yeah. Avinash, do you think that's a good strategy at this point to let's be safe? Or would you be, trying to catch a falling knife right now with what you've seen in the markets last 20 minutes or so, actually?
No, I think, Tamanna, I think it's better to stay put as of now. I think we have been telling our clients that, you would be getting opportunities at lower levels. And I think, on the Nifty, 24,500 has been a very good, strong support level. If at all this level is broken, then I think there could be a little bit panic on the market. So I think, with these kind of fluid factors floating around, I think it would be wise enough to wait for some time. I think the earnings season also not been all that great. So we have been telling our clients that there's no need to hurry. Keep your money invested and your ammunition ready. Whenever you get good opportunities, maybe at lower levels, that could be a good entry point. So, as of now, there's no need to make a adventurous entry at these levels. Better to stay put for some time.
All right, now shifting focus to some buzzing earnings in the trade today. Ratnamani Metals and Graphite are the ones that Vansh has got on his list. Vansh, what are you picking up when it comes to both of these earnings? Graphite's not as good as Graphite India, not as good as HEG.
Right, so if we talk about Graphite India, the company has reported a set of numbers, and the numbers are muted on all the fronts. There has been an increase in the raw material cost for the company, and the net profit is fueled by the other income. And the company has also announced that they will be investing 600 odd crores for expanding their graphite electrode capacity by 25,000 tons in 2 phases. If we talk about the earnings, the revenue is down at 665 odd crores versus 666 odd crores. The margins are at 6.5% versus 5.9%, and the EBITDA is up at 10.3% versus at 43 odd crores, and the net profit is up 134 odd crores versus 50 odd crores. If we talk about Ratnamani Metals, the stock is down 2%, and there has been a muted set of numbers from the company. There has been a weak operational performance on all the fronts, and there has been a decline in the margins for the company. If we talk about the earnings, the revenue is down 32%, EBITDA is down 37%, and the margins are at 16% versus 17%. The net profit is down 36%. So clearly muted set of numbers that the market is penciling in for these stocks.
Okay, so a lot of buzzers over there as well, and we'll get to ITC. I think ITC is that big set of numbers, Mahima, that we're tracking this afternoon. Going to see the last of the major FMCG companies. Are they expected to be in line with what we've seen? Because now after HUL, Nestle, different business of course and different mix, but the expectations have come higher.
Definitely, revenue expectations are much higher. In fact, highest amongst the entire FMCG staple pack. The revenue is expected to grow around that 15% is what the Bloomberg analysts are suggesting. Good revenue growth, but margins are likely to be under pressure, and this is because of tobacco inflation plus the pressure in terms of FMCG as a segment as well as the paper business. Overall revenue growth of around 15%, EBITDA slight growth of around 2%, margins to come down to that 35% mark. Net profit to see a good growth of around 5%, which is in line with how FMCG has done so far. Cigarette volumes will drive the top line growth is something that analysts are expecting. Agribusiness will also aid top line. Marginal drag in terms of the paper business is expected. Volume growth in cigarette to be around 5 to 6% and FMCG volume growth is set to be around 3 to 5%. Key things to watch out for should be, how much of a margin pressure is there because of tobacco inflation and how much of that is being transferred. So that is one thing. Plus the price hikes that have been taken this quarter, and how is the value versus volume growth faring, because that gap needs to narrow in order to see some kind of expansion in terms of margins. And lastly, demand outlook and competitive intensity. So this is with respect to ITC. Avinash, any view here? Do you expect the results to be on a good footing?
Yeah, I think ITC should put up a reasonably good show. My sense is that the volume growth of 6-7% plus hopefully the other components of the business look to be quite interesting. In fact, I believe the rural market, up market, the demand from the rural market is a key driver for ITC. Hopefully, this could also be a key driver for the company. I think markets would look at the profit growth, percentage compared to the previous quarter, that is the March quarter as well as the previous year quarter. But I think in terms of margins, I think even if they maintain the margins, I believe the traction would definitely be healthy. I think the second quarter could be equally stronger quarter, but I think numbers, if at all, would please the market is the volume growth. If they show 7-8% volume growth for the cigarette business and all the other businesses also record a good strong volume and value growth, that would definitely be encouraging. And of course, then what kind of management commentary the management speaks post the Q1 call.
Okay. So ITC, big expectations there. Amar, technical view, if at all?
Yeah, I would say that if you look at ITC seems to form a bottom somewhere, a very strong support around the 400, 410 levels, and the last couple of days it has moved up. So, but on the upside, 425, 430, that's a key zone of resistance. If that is taken out, then we could witness some upside rally in ITC, because otherwise the stock is purely in a trading range between 400 and 440 on the upside.
Okay. All right. So that's the expectation on ITC. Just want a quick check on how HUL is doing. HUL championed through most of the morning. Has it held up? But no, it's come off, but still in positive territory, about 1% up. Auto sales is the other big trigger that we've seen in the markets today. July auto sales revealed robust momentum in the two-wheeler segment, driven by premium and scooter sales, while truck makers registered impressive gains. Puneet is breaking it all out.
Well, thank you for that. So definitely strong momentum in the two-wheeler space. Premiumization as well as scooterization are the two key trends visible for growth amongst these players. That's the first key trend. Passenger vehicle, they're showing a very stark contrast, and we'll put some light on that. That's the second takeaway. Truck makers was the biggest surprise in the month of July. It's a slow month, a monsoon impact, not so much construction, but all these companies have reported mid-single digit growth against estimates. So that's one key positive. And tractors have continued their positive momentum, led by the rural sentiment as well. Let's quickly look at the numbers for two-wheeler makers. First, for someone like a TVS, it's been really, again, a strong month. 29% growth on a YOY basis. The estimates also are handsomely beaten. So this one has shocked analysts across the board, both in scooters and in the premium bike segments, and has shown the highest growth. When you look at the other ones like Eicher and Bajaj, Eicher again a 31% growth. This is now a consistent outperformer, over 80,000 sales for the company in the month of July, and this is the 8th straight month for the company to do so. Clearly a change in strategy. When you look at Bajaj Auto, and you can see the stark contrast between TVS, Eicher and someone like Bajaj. The product profile has definitely been a key concern for Bajaj, and that's visible in the numbers, just the 3% year on year. While in line with estimates, the key aspect is the growth is very weak for Bajaj in this particular month. When you look at, Hero is still we are still awaiting numbers for Hero MotoCorp. So let's move on to the passenger vehicle side. We had players like M&M as well as Maruti and Tata Motors come out with the numbers. For Tata Motors specifically, it's a weak month. It's down 11% on a YOY basis, in line with estimates, but a weak momentum. When you look at M&M as well as Maruti, for Mahindra, it's a 20% growth. And here you see the stark contrast again between Tata Motors down 11% and M&M up 20%. This one again, Tata for Maruti, It's a 3% growth, but within segments, we've seen the compact or the smaller cars come back again. So Baleno, amongst others, have shown growth. That's a key positive, while exports momentum has also continued. Hyundai is again in the camp of Tata Motors, very weak show in this month, and the trajectory for growth is shifting to the second half. Finally, in terms of truck makers, and here is where the surprise is, Ashok Leyland, Tata Motors, all doing very well, 7% growth on a YOY basis for Tata Motors. Let's look at VECV now. Again, a 7% growth. The estimate was built in for a higher growth, but that has come ahead of estimates. And same thing for Ashok Leyland as well. Is the trucks and the bus segment performing well for all three companies, and tractors for Escorts as well as M&M tractors. For M&M, it's been a steady growth. They are the market leader, continuing to hold market share. And finally, Escorts as well. So within this aspect, we were expecting three key winners of Eicher, Mahindra as well as TVS, but we will have to add someone like an Ashok Leyland to that list on really strong show, while Tata Motors' CV division has surprised on the positive side.
Okay, Puneet, thank you so much for that detailed review of how auto sales have fared. Avinash, I'll come to you on this one. What are you picking up with respect to trends when it comes to these auto sales numbers?
So I think clearly, tractor sales continue to be robust, and players like Mahindra and Mahindra are going to benefit significantly. In fact, smaller players like Indo Farm Equipments, which are small players in the tractor market, could also benefit. But I think M&M has shown a very decent performance. Even their electric vehicle portfolio has taken off very well. On the two-wheeler side, I think TVS Motors has been showing very strong growth. I think very exceptionally very strong growth. And if the company does maintain these levels, then I think it won't be surprising that there could be some further re-rating here. I think the best part is that they have been managing this on a higher base compared to other players like, say, Bajaj Auto, which has not managed a double-digit growth. So I think to a large extent, the markets would look at consistency in the next couple of months. Hopefully, if that consistency maintains, then you could see a lot of re-rating happening in stocks like TVS. M&M continues to be a strong bet, within the utility vehicle and the tractor market segment. And I think, any dip here should be used as an opportunity to accumulate, because we believe that, in terms of the balance sheet, in terms of the gearing, cash flows, M&M is very well positioned. So I think M&M and TVS, I think both can be put up in the portfolio on declines.
Okay, and guys, while HEG and Graphite India certainly fit the bill of the top losers today, or key losers today, you have to look at two stocks. On the downside, it's IIFL Finance, and on the upside, it's Trent. 3.5% up for that one. Some really solid moves on a day when the Nifty is down 1%. Kunal, very quickly, or rather Amar, very quickly before we wrap up, maybe we spoke about this earlier, but Trent and IIFL Finance on the opposite ends. Do you like the charts for a long or a short on either of them?
Yeah, see, overall, Trent seems to have formed a bottom, because the stock had corrected from almost 8,000 levels, and there is a possibility that we could see the stock rallying towards the 5,400 levels. And the current recent low of 5,000, that should hold as a short-term bottom for the stock.
Okay, Avinash and Amar, thank you so much for taking out the time and coming to us at NDTV Profit. Have a great weekend ahead. Let's take a look at markets are wrapping up. Let's take a look at how the week is ending. We'll try to pull up how the entire week is fair for the markets as well. The Nifty 50 ending 0.8% lower. The Bank Nifty also has come down, ending 0.6% lower. Let's try to pull up the Nifty heat map and see if the gainers are still the gainers on that chart. Trent, yes, continues to be the top gainer, up 3.3%, but has come off a tad bit. There's Asian Paints up 1.6%, HUL up 1.3%. So a lot of consumption names seeing good gains today in the trade. Nestle, ITC, all seeing good gains. ITC ahead of its earnings, but counters that have lost ground today. Sun Pharma down 4.5%, Dr. Reddy's down 3.9%, Adani Enterprises down 3.6%, Cipla, Tata Steel, Infosys, Tata Motors, Maruti, Shriram Finance, Wipro, all of these counters, SBI Life as well, down by about 2% each. Let's also try to pull up the advanced decline ratio, because that has widened throughout the day. There you go. This is the chart that is indicating that the broader end of spectrum is still under pressure. There's 492 odd advances versus 1795 odd declines. So when we started the show, the ratio was roughly that 2:1, but that has now gone to almost 2.5:1. Let's also try to pull up the sectoral heat map and see how sectors have fared today. It's the Nifty FMCG the only counter in green today, ending in green today, and that's around 0.7% up. But Nifty Pharma is under pressure, down by about 3% and this is largely led by Sun Pharma as well as Cipla and Dr. Reddy's. Nifty Defense seeing profit booking yet again, down 2%. Nifty Metals down 2% as well. Nifty IT also seeing significant pressure, down by about 2%. Nifty Realty also seeing cuts of about 2%. So that's with regards to where the sectors stand. Let's also try to pull up the broader markets and see how broader markets are ending. There you go, down 1.4% for the mid-cap 150 at its day's low point. Similarly, small cap 250 also ending with cuts of about 1.7% at its day's low point. Let's try to pull up the BSE 500 quickly and then also try to pull up the weekly charts for the Nifty, Bank Nifty as well as the broader markets. KIOCL leading the pack, 14% up. Suzlon seeing gains of about 7%. Supreme Petrochem, Radico Khaitan, PNG Health, CCL products all seeing gains of about 5 to 6%. There's PNB Housing, top loser on the BSE 500 and that's down by about 17.6%. IFL, GSK Pharma, Graphite India, Sonata Software all seeing cuts of about 10 to 7%. Let's try to pull up the weekly chart if we can for the Nifty 50, the Bank Nifty as well as the broader markets. There you go. The Nifty 50 ending with a downside of around 0.8% this week. The Bank Nifty also, if you can try to pull that up, there you go, ending with around negative 1.1 odd percent. The mid-cap 150 seeing downtick of around 1.7% this week, and the small cap 250 seeing a downtick of around 2.7 odd percent this week. And this is largely on the back of the kind of downtick that we've seen in the last hour of trade. Let's also take a quick look as to what are the cues or important events to watch out for. During the weekend, you have your Indian foreign exchange reserves data coming in, your US unemployment rate data coming in, your US moving on even from that US unemployment data. There are corporate actions that you need to keep your eye on. Ex-dividend companies, Greenply, Britannia, Deepak Nitrite, Praj Industries, as well as some names like Fairchem as well as MK Global, which will be trading ex-dividend. Let's try to pull up the earnings that you would watch out for today post-market. ITC amongst the big one, Bazaar Style, Tadil, as well as PC Jewelers, Symphony, some counters, GR Infra that you will be watching out for earnings. Earnings that you'll watch out for tomorrow or over the weekend, that is Saturday and Sunday, is going to be ABB India, which is going to be a big one. Federal Bank, something like Gujarat Ambuja, as well as Balaji Amine, some earnings to watch out for over the weekend. So this is with regards to where the cues to watch out for this week. But we have Shreyansi joining in with what you're supposed to do over the weekend.
Well, absolutely, and there's a long list there, right? And we'll take you through just that. First things first, let's take a look at the top 2 movies that you should be watching out for. Both of them, interestingly, are sequels. Son of Sardar 2 is the first one that we're looking at, and the second one, of course, is Dhadak 2 that we're looking at. There you have it. Let's take a closer look at Son of Sardar 2 because this is the one that is a sequel to a 2012 hit. Ajay Devgan is the one who's starring in this one, and the budget is 150 crore rupees. Now, there's already competition from holdovers, the likes of Sayara, that we'll be talking about in just a bit. So that's also something that's quite concerning, but let's see how this one pans out. Along with Dhadak 2, that's made with a budget of 45 crore rupees, has Tripti Dimri, who's famous for her performance in Animal, Siddhant Chaturvedi as well. In this 2018 film sequel, now that's the one that had Janhvi Kapoor as well as Ishan Khatter debuting. So this one's going to be an interesting one on caste politics as well as marriages. And let's also take a look at Bollywood's guiding star than Sayara, in fact released on July 18th. Let's take a look at the next plate that has the collections as well, made with a budget of 60 crores, managed to get 270 crore plus rupees on just day 13. So Mohit Suri has really hit it out of the park with this one. It's managed to rake in all of these collections that are unheard of this year as far as Bollywood is concerned. Let's take a look at some of the OTT releases that you should be keeping on your radar as well. There you have it. You do have Trainwreck, Storm Area 51. Now, this is a part of an 8-part anthology that features all of these bizarre events. It has bizarre events that have blown up in mainstream media, and this is the one that is about Storm Area 51, which is a very big event that was very important in Nevada. Let's look at the next one as well, which is Chief of War. It stars Jason Momoa, and this is the one that is debuting on Apple TV. That's also the second one on the list to watch out for. So thank you so much for tuning in, and this is your list that you should be looking at.
has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, markets have ended lower in red with Sensex down 608 points at 80,577 and the Nifty was also down by 200 points at 24,566 levels. Nifty closed 1% lower for the week and benchmark indices fell for fifth straight week. Almost all the sectors have closed in the red with the exception of FMCG. So the pharma sector was a major drag, plunging by 3.5%. Now this is following reports of a letter from President Trump to major pharma companies demanding they slashing drug prices. Now other sectors have also recorded significant losses there, with auto, IT and realty almost down nearly 2%. In contrast, the FMCG sector saw a slight gain, closing up by 0.63%. PNB Housing Finance's MD and CEO Girish Kuzgi will step down on October 28th of 2025 after a 3-year stint, triggering a 16% share drop. So Kuzgi resigned to pursue external opportunities. Ashok Chandra, MD and CEO, told NDTV Profit that no impact is likely on the company from this change of guard. So a rigorous search for a new leader is underway, with PNB Housing assuring stakeholders its growth trajectory remains intact. The stock is down 25% in a month, faces headwinds despite a stellar 5-year return. Nelco, a Tata Power subsidiary, saw its shares climb 7%, driven by its June 17 unified license for VSAT virtual network operator, enabling national-level satellite communication services. The license allows resellers to distribute VSAT services under their brands, boosting rural connectivity for bank ATMs and remote businesses. Nelco's portfolio, including maritime and enterprise VSAT services sector, like banking and oil and gas, with Tata Power holding a 50.04% stake. Nelco's market cap hit 2,460 crore rupees. Sun Pharma's Q1 of FY26 results show a mixed performance, with revenue up 9.5% year-on-year to 13,851 crore rupees, which is in line with the estimates driven by strong growth in India, up 13.9%. EBITDA also rises 11.3% to 4,073 crore rupees, beating the expectations with a 29.4% margin. So thanks to a favorable product mix, however, net profit has fallen 19.6% to 2,279 crore rupees, missing the estimates due to 818 crore rupees in the exceptional charges, excluding a litigation settlement and drug discontinuation cost. So the US launch of Lexcelvi for alopecia areata bolsters Sun Pharma's specialty portfolio with focus on the future growth. Swiggy's Q1 of FY26 results show revenue soaring 12.5% quarter-on-quarter to 4,961 crore rupees, beating the estimates driven by robust food delivery and quick commerce growth. However, the net losses widened to 1,197 crore rupees, with quick commerce arm Instamart posting an 896 crore loss due to aggressive dark store expansion. Gross order value surged 45% year-on-year, and monthly transacting users hit 21.6 million, up 35%. Eicher Motors reported an in-line Q1 of FY26 with consolidated revenue up 14.8% year-on-year, driven by strong volume growth in the Royal Enfield motorcycles. So net profit has risen 9.4%, supported by a 10.2% increase in the two-wheeler sales to 2.58 lakh units, boosted by rural demands and premium models like Himalayan 450. EBITDA grew 3% to 1,202 crore rupees, with margins improving to 23.9%, which is nearly 24% from a three-quarter low, though down from 26.5% last year. So the company's focus on volume over margin continues, with new launches and export growth to Latin America and Southeast Asia fueling the optimism. JSW Energy delivered a stellar Q1 FY26, beating the estimates with a 42.4% surge in net profit to 743 crore rupees and a 78.6% revenue jump to 5,143 crore rupees, fueled by renewable capacity additions and the O2 Power acquisition. So EBITDA has soared 96.7% to 2,789 crore rupees, with margins expanding to 54.2% from 49.2%. So net generation has risen 71% to 13.5 billion units, driven by a 54% increase in the renewable output and contributions from the Mahanadi plant. Adani Power reported a decent set of numbers in Q1, with net profit jumping 27.2% quarter-on-quarter to 3,305 crore rupees, driven by robust power demand and improved margins. Revenue has dipped slightly by 0.9%, but EBITDA has surged 18.1%, while margins rose to 40.3% from 33.8%. This is fueled by lower fuel cost and higher merchant tariffs. Now, power sales volumes has risen 5% to 25.5 billion units, supported by 1,600 megawatt of Godda plant. So, regular payments from Bangladesh, including over $500 million in the last 2 months, eased the liquidity concerns. Adani Power targets 47 gigawatt capacity by FY28, reinforcing its thermal power dominance. GSK Pharma's Q1 of FY26 results showed resilience, with net profit climbing 12.45% year-on-year to 205 crore rupees, beating the estimates driven by a favorable product mix and cost control. So revenue has dipped 1.2%, impacted by US tariff pressures and generic competition, but EBITDA has surged 8.96% to 251 crore rupees, boosting the margins to 31.19%, which is nearly 31.2% from 28.3%. So growth in specialty medicines like Augmentin and vaccines offset the declines in the legacy brands. Chalet Hotels reported a stellar Q1 FY26, with consolidated net profit soaring to 34.8% to 203 crore rupees from 60.67 crore rupees. This is driven by a 147.8% revenue surge to 894.5 crore rupees. EBITDA has risen to 357.28 crore rupees, with margins improving to to 39.9%, which is nearly 40% from 38.8%. So despite the geopolitical challenges, a 17% rise in the average room rates to 12,207 rupees boosted RevPAR by 10%, though occupancy dipped to 66% from 70%. So the hospitality, annuity and residential segments grew 42%, 83% and 37% respectively. New room additions and ongoing projects like the Taj Delhi Airport signal a robust pipeline. Birla Corporation reported a 266% year-on-year surge in Q1 of FY26, consolidated net profit to 120 crore rupees from 32.6 crore rupees, aligning with the estimates. So revenue grew 12% to 2,454 crore rupees, driven by a 9% rise in cement sales volume to 4.79 million tons, despite the monsoon disruptions. So EBITDA rises 34% to 347 crore rupees, with margins improving to 14% from 11.8%. However, EBITDA per ton at 715 rupees, up from 603 rupees, lags the peers. Subdued pricing in central India, accounting for 50% of sales, and extended shutdowns at 2 plants impacted the clinker production. Wonderla Holidays reported a challenging Q1 of FY26, with consolidated net profit down 16.7% year-on-year to 52.6 crore rupees from 63.2 crore rupees, which is impacted by an 8% drop in footfalls to 9.17 lakh rupees due to heavy monsoons. Revenue rises 1% to 179 crore rupees, but EBITDA has fallen 9% to 87.5 crore rupees, with margins contracting to 49% from 54%. So average revenue per user grew 6% to 1,775 rupees, and spend per head rose 11% to 493 rupees. The Bhubaneswar Park and new glamping pods at Bengaluru's Isle Resort boosted the non-ticket revenue despite the seasonal headwinds. Chambal Fertilizers and Chemicals reported a 22% year-on-year increase in Q1 of FY26, consolidated net profit to 548.9 crore rupees from 449.3 crore rupees. This is driven by strong growth in the crop protection chemicals and specialty nutrients. Revenue rose 15.5% to 5,697 crore rupees, but EBITDA grew only 1% to 760.9 crore rupees, with margins contracting to 13.4% from 15.2% due to higher raw material cost. So the company has launched 13 new crop production products and Bajra maize seeds with 4 specialty nutrients products planned for Q2. Despite the margin pressure, Chambal maintains robust growth momentum in the non-urea segments. NCC clinched 2 orders worth 791.5 crore rupees in July 2025 from state government agencies, boosting its robust order book to 71,568 crore rupees as of March 2025. The contracts include 461 crore rupee for the buildings division and 330 crore rupees for the electrical division, complementing a prior 2,269 crore Mumbai Metro order. So despite a 33% stock decline over the past year, NCC's diversified portfolio across the infrastructure sector signals strong growth potential. So the company, with a market cap of 14,092 crore rupees, remains a key player in India's construction landscape, with no promoter interest in awarding entities. ITC is expected to report a 14.5% year-on-year revenue increase to 20,925 crore rupees in Q1 of FY26. This is driven by 5 to 6% cigarette volume growth and strong agri-business performance. Now, net profit is also projected to rise 3.4% to 5,085 crore rupees, while EBITDA may grow 2% to 6,417 crore rupees. However, margins are likely to slip to 35.1% from 37.3%, primarily due to pressures in the FMCG and paper segments from rising input costs and cheaper Chinese imports. So investors will monitor management commentary on the recent acquisitions, rural-urban demand trends and raw material pricing. Jane Street is under investigation by the Income Tax Department of India for treaty shopping through Mauritius. So Jane Street allegedly routed its high-frequency derivative trades via a Mauritius-based entity to claim the capital gains tax exemption under the India-Mauritius Tax Treaty. So the firm reportedly booked significant profits in Indian F&O while showing losses on equity investments in the Indian companies. This resulted in a near zero overall tax liability for its India-linked trades. Authorities believe that Jane Street wrongly claimed these treaty benefits as profits from the derivative segments are considered taxable in India. Lenders are concerned about rising stress in the MSME loan segment. This is driven by economic slowdown, tighter credit conditions and borrowing over-leveraging. While MSME loan book growth remains at 29% year-on-year, lenders report a sudden strain, especially in the smaller loans below 20 lakh rupees. The sources say that although some sectors and rural markets show resilience, overall growth in the MSME lending is slowing, with the market size contracting slightly as risks mount. SEBI chairperson Tuhin Kanta Pandey has flagged concerns over the misuse of preferential allotments and fake disclosures by listed companies. Speaking at an industry event, he outlined how such schemes often involve diversions of shareholder funds, round-tripping through subsidiaries, circular transactions with dummy entities, and misleading disclosures made ahead of the lock-in expiries. 4 flight attendants from Alaska Airlines 737 MAX 9 are suing Boeing for physical and psychological injuries. Now, this is for a mid-air cabin panel blowout in January 2024, filed on July 29 in Seattle's King County Superior Court. So the lawsuits claim negligence and unsafe manufacturing, seeking compensation for economic losses, emotional distress, and medical cost. The incident caused by missing bolts led to a gaping fuselage hole at 16,000 feet, traumatizing crew and passengers. Shanti Gold International shares hit the bourses today. The IPO was subscribed over 81 times. The 360 crore rupee issue was priced at 199 rupee per share. The company managed to raise 108 crore rupees from anchor investors like Society Generale. Now, proceeds of the issue will be used for setting up a facility in Jaipur, funding the company's incremental working capital requirements, payment of debt, and for general corporate purposes. Apple's fiscal Q3 results dazzled, with iPhone sales jumping 13.5% to $44.58 billion, surpassing the Wall Street estimate. Now, this was fueled by a 1% sales boost from the customers buying early to dodge Trump's tariffs. America's sales rose 9.3% to $41.2 billion, while total revenue grew 9.6%, the fastest since the pandemic. CEO Tim Cook noted record upgrades for iPhones, Macs, and Apple Watches. Despite an $800 million tariff hit in June, Apple forecast mid to high single-digit growth for Q4, but warns of $1.1 billion in the tariff cost. So shares have risen 2% after hours, though concerns linger over AI delays and a 17% stock drop in 2025. Amazon.com forecast third quarter sales above market estimates, but failed to live up to lofty expectations for its Amazon Web Services cloud computing unit. Now, this was at the heels of rivals handily beating Wall Street forecast. Now, shares plunged by more than 7% after hours. Before releasing the results, Amazon had finished regular trading up 1.7% to $234.11. The Election Commission of India has announced September 9 as the polling date of the vice presidential election, following Jagdeep Dhankar's resignation on July 21. Nominations open on August 7, with August 21 as the last date for filing, and votes will be counted the same day. So the Electoral College, comprising 788 MPs from both the houses of the parliament, will elect the new vice president using a single transferable vote system. The BJP-led NDA, holding a majority, is likely to influence the outcome. 24 women and 3 minor girls were rescued from a human trafficking racket in Assam. 4 people who were suspected of orchestrating the racket have been detained. The operation conducted jointly by the Railway Protection Force and government. So the railway police occurred during a routine inspection on Vivek Express at the Tinsukia railway station. Officials questioned passengers in coach S1 and discovered the girls were being transported in Tamil Nadu under the pretext of job placements offered by an agency. Former MP Prajwal Revanna has been convicted of raping his house help. The Special Court for MPs and MLAs in Bengaluru said that it will announce the quantum of punishment against Revanna, the grandson of ex-Prime Minister H.D. Devegowda. A woman who worked as a domestic help at Revanna's family's farmhouse accused Revanna of repeatedly raping her since 2021 and threatening to release videos of the abuse if she revealed the incident to anyone. So during the trial, the court examined Revanna, who was arrested on May 31 last year, and all 26 witnesses. It then framed charges against him under various sections including rape, criminal intimidation, and unlawful circulation of intimate images. The All India Football Federation today named Khalid Jamil as the new head coach of the Indian men's football team, marking the first Indian appointment in 13 years. Jamil was selected from a shortlist including Stephen Constantine and Stefan Tarkovic after a rigorous month-long process. The 48-year-old, known for his tactical discipline, replaces Manolo Marquez, who parted ways last month after a winless stint. Jamil's first challenge is the CAFA Nations Cup, starting August 29 as he aims to revive India's 133rd ranked squad. England seized the upper hand on a rain-disrupted first day of the fifth test at the Oval, with India reeling at 204 at 6. So key batsmen KL Rahul, Ravindra Jadeja and captain Shubman Gill fell cheaply. Gill's suicidal run out proving costly. So Karun Nair's unbeaten 52 and Washington Sundar's 19 offer hope. But Gus Atkinson's 2 wickets for 31 runs put England in control. A late injury to Chris Wokes marred their day. Ajay Devgan, son of Sardar 2, crossed 91 lakh rupees on its opening day, surpassing Dhadak 2's 41 lakh, but falling short of the expectations amid fierce competition from Sayyara and Mahavtar Narsimha. So the comedy sequel, a follow-up to the 2012 hit, sold 17,000 tickets across 3,000 screens, driven by positive reviews lauding its humor and vibrant Punjabi appeal. However, muted pre-release buzz and a crowded release window limited its performance, a stark contrast to the original's 10.7 crore rupee debut. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned.
Tesla has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Big exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One inside a Tesla for a first of its kind interview in discussing Teslanomics and Tesla's influence on India's markets and future. Benchmarks end close to 1% lower, with Sensex losing around 600 points. Most sectoral indices close in the red, with Nifty Pharma as a top loser after Trump warned pharma companies to cut prices or face punishment. PNB Housing Finance tumbles close to 18% after the resignation of Managing Director and Chief Executive Officer Girish Koski with effect from the 28th of October. Sources tell NDTV Profit the Income Tax Department is probing global trading firm Jane Street for suspected treaty shopping after they allegedly routed derivatives trades through their Mauritius-based entity to claim capital gains tax exemption under the India-Mauritius Tax Treaty. The Enforcement Directorate searches 4 locations in Bhubaneswar and Kolkata in connection with a 68.2 crore fake bank guarantee case reportedly linked to the Anil Ambani Group under the Prevention of Money Laundering Act. SEBI proposes IPO allocation overhaul, suggests to allocate at least 35% of the offer for IPOs below 5,000 crore rupees to retail investors. As for the IPO of above the 5,000 crore, 10% of the amount must be allocated. Overall retail share cannot be less than 25%. Two-wheelers see strong momentum in July, led by premiumization and scooterization. Passenger vehicles witness a stark contrast as Tata Motors sales fall 11%, while M&M sales show 20% growth. Positive rural sentiment drives the momentum for tractors. Trump's 25% tariff on India will take effect from the 7th of August. Base tariff of 10% to continue until then. Concerns grow as there is no clarity on how the penalties will apply. The election for the post of Vice President will be held on September 9th. This is after Vice President Jagdeep Dhankar's sudden exit last month. Hello and welcome viewers, a very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets, national and also international news, so stay tuned. Let's begin with checking how the markets fared today. Nifty and the Sensex posted their worst weekly losing streak, viewers, in nearly 2 years. They declined for a second day in a row. Pharma and defense stocks were the worst hit, barring Nifty FMCG. All sectors ended lower for the week. Let's go across to my colleague Harsh for giving us a quick market wrap on how the markets fared this week.
Well, a tough day of trade and a tough day to close the week as well. It's not been a great week on the Nifty. We were down around 0.8% for the day and over 1% lower for the week gone by on the Nifty. So some pressure starting to emerge. In the last 6 odd trading sessions, we've closed in the red in 4 of those 6. That's something you want to keep in mind as well. In terms of gainers on a day like this, and within the Nifty pack, there were a few. There was Trend, there was Asian Paints, Hero Moto and HUL being the top 4 gainers in trade today. And largely for the week gone by as well, we saw similar kind of a texture. Consumption really took lead both today from a sector perspective as well as this week from a sector perspective. So some consumption names, the likes of an HUL did really well in trade, and even the likes of an Asian Paints, a Hero, a Trend were some of the top 4-5 gainers in trade even for the week gone by. When you're looking at Geo though, it was a top Geo Financial, it was a top gainer on the Nifty 50 for the week gone by. So that one really stood out for me. Now in terms of sectors, the tilt was negative towards pharma today. We were down nearly 3.5% where the Nifty Pharma Index is concerned. Along with it, slid healthcare as well. You saw the Nifty India Defence Index down over 2%. The Metal Index also in similar fashion was down over 2% in trade. And the big one, IT too, was down 2%. So largely that's where all of the drag came from. IT, especially the likes of an Infosys for the week gone by, well, doesn't look pretty in terms of points contribution. And even the likes of some of the pharma names. The Sun Pharma was one of the top losers on the Nifty today and in terms of contribution has done or has had a tough day of trade. When you're looking at the week gone by as well, you saw FMCG dominate, nearly 3% higher for the week. So the defensives are starting to play well. Nifty Realty is down 6% for the week. The Nifty India Defence Index down 5% and the Nifty Metal down over 3.5% for this week. So that's where some of the pressure all through the week has actually come from. The Nifty Mid Cap and Small Cap indices also very similar texture, 1.3% lower on the Nifty Mid Cap Index, 1.7 for the week gone by. The Nifty Small Cap down 1.7 for today and nearly 2.7% for the week gone by. So some pressure emerging there as well. I want to talk a little bit about the broader markets.
And viewers, let's now cut across to the presser of the Ministry of External Affairs. Let's take a look.
ज़रूरतों की सोर्सिंग की बात होती है, उस पे हमारा जो ब्रॉड अप्रोच, मतलब जो हमारा अप्रोच और रवैया है, उससे आप भली भांति अवगत हैं कि जो बाज़ार में, अंतर्राष्ट्रीय बाज़ार में जो तेल मिलता है, किस भाव पे मिलता है और उस समय या इस समय जो भी वैश्विक माहौल है, इसको लेके हम इस पे निर्णय करते हैं. जहां तक स्पेसिफिक आपका सवाल के बारे में बात है, मैं इससे कोई अवगत नहीं हूं. आई एम नॉट अवेयर ऑफ इट. आई डोंट हैव डिटेल्स ऑफ द स्पेसिफिक्स. So, on our energy sourcing requirements, you are aware of our broad approach that we look at what is there available in the markets, what is there on offer, and also what is the prevailing global situation or circumstances. Now, on the specific question, I am not aware of the specifics that you mentioned. On Nimisha Priya case, Sahil, last time when we had the press conference, I had made you aware of our position and I had informed you, and I would like to yet again reiterate that this is a sensitive matter and the Government of India has been extending all possible assistance in this case. As a result of our concerted efforts, you've seen that the sentencing was deferred. It has been postponed. We continue to closely follow the matter and
Those are the comments of the Ministry of External Affairs on various topics, especially after Trump's tariff strike on India. He continues to say to focus on India's broad approach when it comes to our energy sourcing. We will continue to give you a lot more updates and the comments of the government when it comes to these tariffs. But moving on, viewers, Donald Trump has issued a warning to 17 major pharmaceutical companies, demanding that they cut U.S. drug prices within 60 days or face government action. He insists that American drug prices be set in line with the lowest rates found in other developed nations. Now, this policy shift could have significant consequences for Indian pharmaceutical companies, which derive a large portion of their revenue from exports to the US and typically enjoy higher profit margins in this market. What does this mean for Indian pharma players? To explain the potential ripple effects, let's hand it over to my colleague Varsha for further insights.
Yes, so President Donald Trump has issued a bold challenge to some of the world's largest pharmaceutical companies. Now he's demanding that they immediately lower prescription drug prices in the US to match the lowest prices paid by other developed nations. Letters has been sent to 17 major drug makers, which includes the likes of Eli Lilly, Novo Nordisk and Pfizer. Now specifically, if you see, Trump is calling for immediate reduction in prices for existing drugs sold to Medicaid, and he insists that any future drug launch in the US must be priced comparably to international markets from day one. Now he has also presented a unique proposal wherein the US government would help companies raise drug prices abroad to match American levels, but any extra profits earned overseas would then be brought back to the US to offset domestic drug cost. Now if you see, the pharmaceutical companies have been given a strict 60-day deadline to comply this. Trump warned that if they fail to act, his administration would deploy every tool to address what he termed abusive drug pricing practices. Now if you see the market, how this is going to impact Indian companies, so Sun Pharma will actually be impacted, and that's the reason why the stock was under pressure today, because the Sun Pharma has the largest exposure to US branded specialty drug sales, which is a key drug, Ilumya, which treats cirrhosis in adult. And if you see, the Ilumya sales were around 5,000 crores in FY25, and over 50% of Ilumya sales are supported by Medicare Part B. Now if you see, drug generated 5,750 crore in FY25, accounting 56% of Sun Pharma drug revenue. In Ilumya's US price is reportedly 4x higher than the other developed countries, and the lowering prices to global parity could significantly reduce Sun Pharma's US revenue and earnings. So because of this, because of this regulation, Sun Pharma was under pressure as of today.
Right, Varsha, thank you so much for explaining why Sun Pharma was under pressure in trade today. But the fresh round of US tariffs, viewers, up to 25% will take effect from August 7th, with a default 10% rate continuing until then. Now, this means India's exports across key sectors like jewelry, textiles and engineering goods are now under threat. With penalties still unclear, concerns are rising across sectors. Let's now go across to my colleague Rishabh to understand the further impact of this.
Trump's tariff, we have a new date of implementation that has come in. Trump's tariff will be implemented on all countries starting August 7th. So that is when we can expect the 25% tariffs plus penalties to kick in. But till then, what we have is the 10% baseline tariff that is also applicable to all countries. Apart from that, from August 7th, what we can expect is that exports across sectors will be under threat. Number one being gems and jewelry, about $10 billion worth of exports will stand exposed to these tariffs. What we're seeing also is that these penalties that Trump imposed, there's very little clarity on why those were imposed, rather on what shape and form they might take. So there's very little clarity on those. There is clarity on why they were imposed, is because of India's Russia relations as well as being a member of the BRICS and other issues that Trump has highlighted over the past few months as part of his politics. What we're also seeing is a textile sector will get disadvantaged by these tariffs. India will lose that tariff edge that it had compared to manufacturing economies like Vietnam as well as Bangladesh. What we're also seeing is that these sectoral tariffs on aluminium and steel, and also auto and auto components of about 50% and 25% respectively, they will continue separately. So an additional reciprocal burden will not be put on sectoral tariffs. That is what we're picking up. Another sector that is expected to be rattled is the engineering export sector, about $20 billion worth India sends to the US, and that will be hit also, about a $3 to $6 billion hit being foreseen on that bit. So a lot of things to unpack. Another 6 days now we're seeing, remember all of this with the context of the August 25th trade talks that India and the US are set for. The US team is expected to be in India for those. So lots happening. We had the Commerce and Industry Minister statement as well yesterday. So lots to unpack in this, in the run-up now to August 7th.
Right. And we're also actually learning that our sources have indeed told our NDTV Profit reporters that the negotiations over tariffs with the US is continuing to happen virtually. And, these tariffs, although contribute or affect our GDP really subliminally, but the negotiations, however, are continuing. And to give us more details, in fact, and clarity on this development that's coming in, let's go across to my colleague Rishabh, who's joining us on the phone line. Hi, Rishabh, please tell us what exactly are your sources telling you on our negotiations with them?
Yeah, so about these negotiations, we're hearing that they are ongoing, and it's not just about the August 25th in-person negotiations that I'm talking about. This is virtual negotiations on the sectoral level that are continuing. What we're also picking up from government sources is that these tariffs will not be actually applicable to about more than half of India's exports. So India exports about $85 billion worth of goods, of which about $20 billion will be around steel and aluminium, auto and auto parts. Those will make up the exports that are not hit by the reciprocal tariffs. They are hit by the sectoral tariffs. And also about $30 billion in electronics and pharma and petroleum. So those will not be impacted by any additional reciprocal tariffs. You'll have only about less than half of exports being impacted, about a 0.2 loss in percentage loss in GDP foreseen due to these US tariffs. Exports might see some slight hit, but that all of that is not enough, and that India will stick to its red lines and not allow US agriculture and dairy to access India's markets. That is something that we're picking up from our sources.
Thank you so much for that. And remember, viewers, this is an important development that has come in, and India definitely is holding its ground when it comes to its negotiations with America on finalizing a BTA. But moving on, as we dive deeper into the first quarter earnings seasons, let me take you through the Q1 report card of Adani Power. Now, on a quarter-on-quarter basis, the company's net profit surged by over 27% to 3,305 crore rupees. EBITDA too shot up by 18% to over 5,600 crore rupees as compared to the previous quarter. While margins expanded too, revenue took a slight hit, reducing by 0.9% to more than 14,000 crore rupees. Adani Power's board this quarter also approved a plan for a stock split in the ratio of 1:5. Now, this stock split is set to be Adani Power's first ever corporate action. And sources have also told NDTV Profit that the global trading firm Jane Street is under scrutiny for allegedly using its Mauritius-based entity to trade in Indian futures and options. This strategy allowed them to book significant profits while taking advantage of the India-Mauritius tax treaty to avoid paying taxes in India. Let's now go across to my colleague Shimi to understand this matter more clearly.
Well, that's right. The Income Tax Department, which surveyed the Nuvama Wealth on Thursday, is probing a potential case of treaty shopping involving global proprietary firm Jane Street. Sources tells NDTV Profit that Jane Street allegedly rooted its future in option trades through its Mauritius arm, booking significant tax-free profit by claiming treaty benefit. And at the same time, the firm booked losses in equity investment in Indian companies, resulting in zero tax paid on its overall trading activity in India. Now, the tax department believes that this entire strategy constitutes as treaty shopping, shifting profitable trades offshore to avoid any sort of Indian taxation while declaring losses locally. Department, who surveyed at Nuvama, which acted as a sole clearing agent, trying to gauge that why the tax were not deducted when it was liable to withhold tax under the Income Tax Act. Now, department is now looking at the books of Nuvama, the data and the trading details, and could perhaps move to recover dues from them, holding them accountable for non-deduction of tax on behalf of FPI. In this case, the Jane Street. For the benefit of our viewers, India-Mauritius Treaty had allowed capital gains from the sale of shares in the Indian companies by Mauritius-based investor to be taxed only in Mauritius, and due to this exemption, Mauritius became the preferred route for foreign investor for trading both in the equity and derivative. This led to, however, a lot of concern around the treaty shopping, where the entities set up shell companies in Mauritius purely to exploit tax benefit. However, the India renegotiated the terms of this treaty somewhere in 2016 to curb the abuse, and capital gains now on the Indian share acquired after April 1st, 2017 are taxable in India. However, derivative and certain more instruments still have some grey areas, and that's why the dispute like Jane Street keep emerging. Remember, earlier this month, Jane Street disgorged around 4,800 odd crore in profits, after which SEBI lifted a trading ban imposed on this global firm.
Right, Shimi, thank you so much for that. But adding to the Jane Street saga, viewers, sources say the global trading firm is not cooperating with Indian tax authorities. Key financial records and servers are maintained abroad, and officials say access is being blocked. Even the staff in India are few and reportedly not helping with the investigation. The case is now being closely watched as officials try to get more information from the global trading firm. And it's time for a slice of our big exclusive conversation with Dinesh Thakkar, Chairman and Managing Director of Angel One. My colleague Tamanna spoke with him inside a Tesla for a first-of-its-kind interview discussing Teslanomics and Tesla's influence on India's markets and the future. Catch Market Talk with Dinesh Thakkar tonight at 6 p.m. only on NDTV Profit. But for now, here's a sneak peek for you.
Tesla's India's entry has been 10 years in the making, and I'm sure by now you would have seen a lot of reviews on the car, its performance, etc. In this very special show, we're talking about the Tesla, we're talking about the economics of India that allows for a Tesla right now, the demand it could be seen, and why so much excitement about the EV space. But I'm not going to do this by myself. To help me really take you through Teslanomics, I have invited along on this shoot Mr. Dinesh Thakkar. All of you know him, of course, as the force behind Angel One, a veteran market voice. But I don't know how many of you know that he's a complete auto enthusiast and has a garage, which I think is everyone's envy. Thank you so much, Mr. Thakkar, for joining us.
Thank you very much. Thank you very much for this opportunity. As I also am a car enthusiast, so definitely I would really be very excited to drive this car with you, and plus engage in markets, and plus some talks on my car garage.
Yeah. So by the way, I don't know if you guys know, but he has McLarens, Porsches, and believes in performance over luxury. I think that is one thing that you're going to be looking for. Is this about style, and how much of it is about performance?
See, for Tesla, I would say I would look at kind of like innovation, what they have brought in. Apart from being EV, I think this company innovates a lot. And we also being into a field where we believe innovation is going to create deep penetration. So that is a common element what I am looking at Tesla. Tesla is nothing but a computer on wheels. So that way I would say it's more than a car.
You know, the biggest test, at least for any car company and even for a Tesla, is grappling with Mumbai roads. So let's see how that goes. 2-hour drive, and as has been explained to us, first of all, are you excited?
Yeah, definitely. Very excited.
I promise to drive as well as I can. Thank you. Thank you
I fully trust you.
So the way this works is pretty interesting. So I have to, everything is on this screen. There's pretty much nothing here in the center of the car. It's very different from what you see. Nothing around the steering wheel. Everything is from the screen. Now, that can be, I think, excellent if once you get used to it. Perhaps right in the beginning, it'll take some getting used to, because that's not how other cars usually work. So here we go. All right. And we're off. So you know what's exciting about this, Dinesh? I feel that the way they've made this so intuitive. I'm going to start the conversation talking a bit about Tesla, and the whole concept of this conversation, of course, with Dinesh Thakkar, has been to talk about Teslanomics. Has Tesla's time come in India? We've been waiting for this for at least a decade now. By the time it has come, there are other competitors, but Tesla still has that brand value. So some of your thoughts on that. First, Mr. Thakkar, considering that you are truly a car lover and you believe in performance over luxury.
See, Tamanna, what I see is that Tesla is a company who really innovated and built all their cars from grassroots level as an EV. So technology, what they are using is purely thought based on how EV should function, how EV should look like. So you look at all the functions like over here, everything is on the dashboard, which unlike EVs that we see, which are converts from internal combustion engine to this, they are more luxurious car where all the software is fitted. This I am feeling as if it is a computer on wheels. So everything is like so well kind of like designed and so user friendly.
And with that, viewers, it's a wrap on this edition of Profit 360. But do stay tuned to NDTV Profit as we continue to give you a lot more news and updates.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बार में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandnani, and of course, no guesses, likely a pharma company, right? But we've had a good set of numbers coming in from Dr. Lal. Would you say that, Varsha?
Yeah.
Yes, and therefore, you'd want to know as to whether after the entire normalization in terms of numbers post-COVID, whether pathology labs are really one way to play pharma and domestic pharma, given that there is exposure coming in from global, which is coming in through tariffs. So, therefore, this conversation becomes relevant. And we'll start off by understanding what I want to know and why Dr. Lal Path Labs. One is volume growth sustainability. Now, Q1 was a good quarter where volume growth is concerned, and want to know whether that can sustain all through FY26 or not. Really, that's going to be the one key question which we'll want answers to. The second one is with regard to margins and growth guidance. The gross margins have improved and improved quite well, and that is reflecting on the EBITDA margin as well, Varsha. The guidance seems to be 27%, but they've done 28% in terms of EBITDA, both in FY25 as well as in Q1. So that's impressive. Whether that can sustain, and therefore what's the guidance like? They've guided for, I think, 11% top line growth for FY26. So whether that changes at all given volumes. So we'll talk about all of that. The third piece is with regard to radiology. Now, is this going to be the new growth lever to kick through when it comes to a Dr. Lal? It's synergistic with its business, and therefore could this be one of those pillars on which it builds on and further creates efficiencies within its business? That's what I'd want to know. Radiology, is that the new lever? And now then there's the other lever of Suburban as well. The acquisition of Suburban has left plenty on the table in terms of room for operational efficiency to play through. timing of that has been a bit iffy from the management. I'd want to know whether there is something in terms of timing that they can give us. Swasthfit is the other one. Extremely strong set of numbers coming in, driven by Swasthfit. The margins also of Swasthfit have been really, really impressive. Can that kind of a growth clip continue? And then you have pricing. Pricing is the other lever where there's been a bit of a drag where Dr. Reddy's is concerned. Dr. Lal is concerned, and therefore whether pricing improvement can actually happen, and is that on the anvil, and that will obviously impact top line, is what I'd want to know. Unlikely Varsha on this count, but I mean, it's just something I'd want to know.
On the pricing front, I would say that Dr. Lal, they clearly, in last few quarters, they clearly told that they don't want to go for price hikes. They want to play on volumes.
Correct.
And that's the reason you're seeing that there's been a good volume growth, though.
But Varsha, you look at across the hospital space, you've seen price increases rampant, right? And therefore, on the testing side, if you're not seeing price increases, at some point that has to correct, right? It has to adjust itself for inflation. So I'd want to know as to whether they're actually doing that or not. And obviously competition texture, because that will also play through on pricing a little bit. So all of that, of course. But let me first start off with, or rather, I'm going to shift focus entirely to Varsha now. She's going to drive about the company, and she does this well. So Varsha, over to you.
Let me start with that, that as Harsh was saying, because of this all tariff situation, you have hospitals, you have diagnostic companies, so basically they are on the radar of the investors. Why? Because you don't have that overhang of tariffs, playing out in diagnostics and hospitals, and diagnostic itself is growing into double digit, and that's one of the reasons you're seeing many upcoming IPOs. Recently we had Suraksha Diagnostics, and many diagnostics are in focus when it comes to investors because of again the double digit growth and no overhang when it comes to tariffs. But shifting our focus to Dr. Lal, let's see what that company does. I think our viewers know very well what this company does, but still it operates a diagnostic chain with a pan-India presence, and in the last 5 years they have served 131 million patients, and when it comes to pathology and radiology tests, they have almost 5,000 overall 5,000 pathology and radiology tests, comprehensive test menu. They have 298 labs, and they are geographically spread out network. On the operating highlights, when it comes to Dr. Lal, the number of clinical labs have been improved since 22. If you see in FY 22, they were operating 277 labs, which has increased to 298 labs when it comes to FY 25. On to the revenue by geography, if I were to talk about, their major focus is in Delhi, which contributes almost 31% to the overall revenue. Now this is followed by East India at 15%, then rest of North of 13%. Then you have also South India, which contributes 6%, and others at 2%. So overall, their major focus has been into Delhi, but they are expanding when it comes to West India, West and South markets as well. And let's see how they goes up, because the point here is it's very easy to open a diagnostic lab, but it's very difficult to scale that up, and that's one of the reasons. If you see, the diagnostic industry has been clustered. You don't have any diagnostic company with a major pan-India presence. Dr. Lal has done a good job when it comes to pan-India presence, but
this is also more of heartland India, right?
Yeah.
You look at the tilt. 50% is Delhi, NCR and UP, virtually, and just the balance 50, and even out of the balance 50% is East and West, essentially. So, I mean, would you want to see South start to dominate? I'm sure, and I'm sure that that's the way they look at it as well.
That will actually require some time, Harsh, because scaling up a diagnostic industry is actually difficult, and that's one of the reason Dr. Lal, being the king of the diagnostic industry, has been facing, I won't say a problem, but yeah, they're very little slow when it comes to expansion, and that's not their fault. It's the industry, how that operates, and that's also one of the reason why they are going for acquisitions. into those areas where you don't want to open up a lab and then go into all those hustle, just acquire a lab and just move on.
Sure.
So this is how industry operates. But on to the overall, if you see, so there's nothing much. They just operate a diagnostic change. Just because I'm talking about the company, I just wanted to highlight how their Q1 numbers were. The revenue growth that you're seeing is led by the sample volume. SwasthFit contributed 27% in Q1 FY26, and EBITDA increase that you're seeing is led by sustained volume growth, and lastly network expansion and favorable mix also aided EBITDA. So overall, Harsh, a very simple business to understand, but a very difficult to scale that up.
Well, yes. Okay. So that's with regard to Dr. Lal. Let's start off and look at the metrics that we'll speak about with regard to where Dr. Lal is concerned. We'll start off with the income statement, the balance sheet, the regular metrics, frankly, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. That's broadly how we always do it, and for all of you viewers, this is not new. So I'm going to go straight across to Varsha, who will start with the income statement.
Yeah, thank you for that. So overall, if you see the income statement, goods on the 3-year basis, starting from FY23, they've done a good business. So if you see, they've consistently delivered strong revenue growth. Mainly, almost they always have a guidance of 11 to 12%, and even in this financial year also they're expecting that, and they've decently done well. Now this revenue growth that you're seeing is primarily driven by increasing patient volumes and strategic network expansion into tier 3 and 4 cities. And of course, if you see the margins, look at the margins. Margins have improved. So in FY23, from 24% to 28%. Now this is on the back of favorable product mix and of course the cost optimization strategies that the company has been doing, and of course the volume growth that the company has seen. So beautifully they've increased their margins, and even net profit has been increased, of course, because of the revenue growth, the cost efficiencies and the margin improvement that you're seeing. So overall, Harsh, what they have guided in the last 3 years, on and off, 1 or 2 quarter might see some on and off things, but overall, they've done a good job when it comes to overall income statement.
Yeah, I mean, last 3 years, every single guidance that they've put out, what stood out for me when I was researching this, they've exceeded the guidance every single time. So they have a record of really doing well where guidance is concerned. So that's the one key positive which viewers must know. Okay, let me now talk about the balance sheet, and it's a fairly simple one, so I'm going to just breeze through it. You look at the equity and the reserves, they're at around 2,100 odd crore. It's trading at nearly 12 to 13 times its book value, which is on your screen. The borrowing is minuscule, frankly, and currently at FY25 it's zero when I exclude lease liabilities. So on the liabilities column, all of that 157 crore is lease liabilities. No concerns with regard to the balance sheet. Absolutely clean. When I'm looking at the cash reserves as well, it's sitting on a healthy set of cash of around 840 odd crores. So no concerns on that count either. Varsha, cash flow.
Yeah, so if you see the cash flow from operating business, in FY23 it was 456 crore, which has gone up to 569 crores. On the net cash flow, that the negative number that you're seeing in FY25 is because of the investments or cash flow from investing activity that they've done. They've invested in some investments, and that's the reason you're seeing that negative number. So overall a good healthy cash flow that you're seeing. I'll also take Harsh on the ratio side, because if you see, the ROCE has increased from 24% to 48%. Now one of the reasons why this has increased, because company do not operate in radiology. When it comes to radiology business, that business is a capital intensive business, and that's one of the reason. If you see, for Vijaya Diagnostic, the margins have been higher and ROCE has been lower because of the capital intensity that radiology business has with higher margin. So if you compare it with Dr. Lal and Vijaya, you would see the margins of Vijaya higher because radiology has a higher margin, and it's a capital intensive business, and that's one of the reason the ROCE of Vijaya Diagnostics is lower, but the ROCE of Dr. Lab is higher because they do not have much contribution from radiology business. So overall, good set of numbers when it comes to ratios. Yeah.
And fascinating nugget, you know, you'll always get these small nuggets from Varsha when we bring her on KYC. So that's the other big positive. Let's look at shareholding now. And within that promoter shareholding, fairly steady. Again, I'm not going to waste too much time here. It's been 50+% for maybe the last 10 years odd. So no concerns with regard to shareholding. There's decent participation from FIIs as well. FII participation currently stands just above the 20% mark. The highest in the last 10 years was 26%. So some scope for it to go up. DIs also have a fairly solid shareholding at this point at its peak of 17.6%. So that's on shareholding. Street cred also, let me take up actually. Let's quickly look at street cred. We've given this a neutral largely because you look at the 5-year returns. It's been, that's the way it's been. But the 1 month, the 6 month, the 12-month performance has been okay. The last 1 year, not any solid returns, and therefore we've given this a neutral. Let's go across to Varsha. Varsha, you want to take valuations and analyst recommendations?
Yeah, so on the valuation side, you know, Harsh, if you see the PE, the TTM, trailing 12-month PE for Dr. Lal stand at around 51, and if you compare it with, you know, Metropolis, Vijaya Diagnostics and Thyrocare, it's available at kind of discount to all these players. When it comes to FY27 PE, again, Dr. Lal is at 45, and you know, Metropolis is at 42, you know, ranging at the same level, while Vijaya Diagnostics has a higher PE. Now, one of the reasons, again, the radiology business, which, I mean, Vijaya has a good contribution from radiology, and that's and higher margins, and that's the reason the premium valuation that you're seeing in Vijaya Diagnostics. So overall, on a valuation side, yes, Dr. Lal normally has a premium valuation considering the management pedigree and the, you know, a decent business that the company has been, and of course the guidance that they meet the guidance. So overall, I would say a neutral set of rating when we would give to valuations.
Sure, let's look at analyst recommendations as well. Just a 6% upside is what average analysts on the street expect. 17 buy calls, 4 holds, 7 sells. So clearly not too many in the hold and the sell camp versus the buy. We've given this a neutral as well, just given the upside being just about 6%. But let's quickly stack up all of the rating parameters, and what we'll get is a very, very healthy 6.5 on 8 for a Dr. Lal Path Labs. And in fact, let's also go across to the conversation. Let's pull up, there you go, 6.5 on 8. And let's go across to the conversation Varsha and I had with Shankha Banerjee, the Chief Executive Officer at Dr. Lal Path Labs earlier today, and understand what the outlook is, not just for FY26, but what is in store for FY27 also. Listening. Let me first start off, sir, with the Q1 numbers, especially on the volume front. It's been a decent quarter for you. Question is sustainability and any one-offs at all. Is this at all weather linked, given the early onset of monsoon? Has the testing in the system gone up in terms of, are you seeing better volumes because of that, or is this largely just better trends playing out?
Good morning. Thanks for having me on the show.
Good morning.
I think that's a very interesting question, and thanks again for the compliments. Yeah, so the numbers this quarter are obviously quite good in terms of our sample volume, which is now seen a 10.7% growth in our overall revenue growth of 11.3%. Now, our quick analysis shows that this is really not driven by seasonal swing or anything getting preponed. It is primarily like for like versus same quarter last year. So yeah, I mean, this should be sustainable, and all the efforts that we've been making in the last 4 to 5 quarters are kind of bearing fruit in some way.
Right. Hi, Mr. Banerjee. Welcome
Hello.
to the show and pleasure to have you. Mr. Banerjee, if I remember, you had guided for 100 basis points margin compression in FY26 due to the reinvestment that Dr. Lal has been doing. Was Q1 strong margin an anomaly? And if yes, should we expect this compression to be delayed?
So, our margin profile usually is better in the first half compared to the second half. and Q1 margins are not really indicative of the full year. However, the margins that we have seen in Q1 are kind of also making us recalibrate the whole margin situation for the whole year. I think we'll be in a better place to maybe look at the guidance again after H1 is over. But as of now, it appears that we should do slightly better on the margins compared to, I think, what we had guided at the beginning of the year.
Okay, so basically, you're not expecting the compression in the margin going forward, at least for the H1. Okay. Also, please go ahead.
No, sorry, I'll just correct that a bit. I'm saying that we have H1 is definitely a better margin profile than H2 for us, and we had guided a compression in the margin for the full year compared to last year full year. So we will recalibrate by end of H1, and then we'll see. But it looks like we should be able to do slightly better than whatever we had guided earlier.
Okay, understood. Got that point. Also, Mr. Banerjee, so there's been good growth when it comes to pickup points as well. Now, when do you expect to see a significant step up in revenue beyond 15%? I mean, I agree that Dr. Lal has been growing above industry, but can you see, because of the uptick in the pickup points, can you see your revenue growth beyond 15%?
So right now, I think our revenue growth that we have guided is between 11 to 12% for this financial year, and Q1 is kind of in line with that. We will prefer to take this step by step. One would obviously like higher revenue growths. The infrastructure addition that we are doing, whether it's in terms of the new labs that we are adding, the collection network, including pickup points, have a trajectory or a maturity trajectory which is slightly longer, and it usually will not have a direct correlation to growth in the immediate future. So I think that infrastructure work or addition will continue, but our guidance for revenue for this year remains between 11 to 12%, and we are hoping to achieve that primarily driven by volume growth and whatever mix improvement that we can get. We haven't yet factored in any price increases.
So what's happening on the suburban front? Give us that perspective. You've guided that you're being cautious with regard to making large-scale changes within this model. How quickly do those changes come in? What should be the year in which everything should be effective, and what should the impact of that be on your numbers?
So, what we have done is last quarter of previous year, we have now completed the full integration with all the whole range of IT integration also completed. That has given us a bit of a market, disturbance, which has caused in a bit of a slowdown for a period of time. We are recovering on that growth. Also, now with the whole Suburban Diagnostics as an entity getting merged, we are more looking at West as a region to see how is that going to grow, because now there is, fungibility between Suburban and Lal Path Labs in certain areas. So that's what we are going to track. And our West region growth, we are looking forward to kind of start coming back to the numbers that we want maybe in another quarter or so.
Got that. Also, Mr. Banerjee, now coming to your, Swasthfit portfolio. Now you've seen almost 20 to 22% growth when it comes to, that portfolio. Is this growth sustainable, or you're expecting a higher growth also in the coming quarters?
So our Swasthfit growth, as you rightly said, has been 22% for this quarter, and the contribution has inched up further. It's now 27% of our revenue numbers, and we still see some bit of headroom available for this growth to continue. specifically, driven by the fact that not only urban markets, but we are seeing, the acceptability of the first fit bundle packages in some of our tier 2, tier 3 towns and below as well. So that is kind of helping us besides whatever we are driving in our core markets in terms of first fit portfolio.
Okay, also on the radiology, so how do you view radiology as your, future growth driver? Because there are competitors, offering services like ECG at home. How will Dr. Lal Path Labs approach these basic and advanced, radiology services going forward?
Yeah, so radiology, like you said, can be broken into basic and advanced. So in some of our metro markets, we offer the basic radiology services like X-rays, ultrasound, ECG, treadmill tests, etc. But high-end radiology, which is CT, MRI, and all, that's not something that we are kind of into too much. But even in the basic radiology that we do, currently that contribution is pretty low. So that is something that we are continuing to evaluate as to how can that business model help us grow in the future. As of now, our focus remains on pathology and scaling pathology, but that radiology option is also always available to us, and we are continuously evaluating that part of the testing portfolio as well.
Mr. Banerjee, any kind of any number or any target that you have when it comes to radiology, maybe in next 2 to 3 years you want to take X percentage of revenue contribution from that segment?
Right now, like I said, we are just evaluating because the business model around the high-end radiology works quite differently from the way the pathology business works. So we haven't yet, we don't have a business plan which is targeting a certain growth coming through radiology. But yeah, we will continue to evaluate that, and maybe when the opportunity is right and our plans, maybe then create plans to see how we can add that to our portfolio.
All right, that's in fact all the time we have on this edition of KYC. From Varsha, myself, everyone who puts the show together, thanks so much for watching, and we hope you found this helpful.
Has finally charged into India. But beyond the buzz and excitement of sleek EVs on Indian streets is the rise of Teslanomics. Because it's not just another foreign automaker entering India. It marks a turning point in India's consumption story, where demand for luxury and premiumization is alive and growing. It's an economic ignition fueling India's growth trajectory. Buckle up, the Teslanomics ride is just beginning.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बार में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
You can tell a lot about yourself by the way you react to something that you had not anticipated, especially when it comes to money. And this is usually not something that you can analyze in the moment. If you were an investor in the equity markets in 2020, I want you to think about the reaction that you had in the month of March. I, for one, was on a holiday, and for the most part, blissfully unaware that the equity markets were plummeting. I'm not sure when I realized, but I distinctly remember looking at my mutual fund portfolio and seeing that it was in the red by more than 30%. I remember that visceral fear that my savings had evaporated in just a few days. Equally, I've been guilty of going overboard when the equity markets were on a bull run, making all of us feel like kings and queens and like we could do nothing wrong. Greed and fear, two opposing factors that dictate the course of capital markets, and the way that you navigate them determines your individual success. Doing this well is easier said than done though, and that's what I want to talk to my guest about today. Joining me today is Ashish Somaiya, Chief Executive Officer at White Oak Capital Asset Management. Ashish, thanks so much for taking the time.
Thank you. Thanks for inviting me.
So, I'm hoping that people remember this because a lot of people started out at that point. They bought the dip, so to speak, or entered at that point, and a lot of wealth was created. But those people that started in September of 2019 saw the crash. I was lucky enough to learn from that, I think. And I saw this interesting post that you had on LinkedIn where you were talking about meta thinking, which is thinking about thinking.
Yeah.
And is that the key?
Yes, Alex, I just realized because, I'm lucky enough to meet a lot of people and observe many people and their thought process, etc. So one thing I've realized over time is that everybody spends a lot of time trying to figure where the market will go. Everybody tries to predict the course of the markets. And what I've learned is that, markets are not predictable, but irrespective of where the market is, how people behave, how they react, that is kind of, that carries a lot of insight. So you may not know which way the market will go, but just by observing how people are conducting their affairs, or even by observing how you are feeling about markets, you can get a lot of clues in terms of the market direction. So, meta thinking obviously is something which differentiates us from other species of living beings, because we are one of the only species, probably the only species, where we can think what we have been thinking. We can analyze what we've been thinking. More importantly, we can even analyze how we've been feeling. So, if you find, if you react to the market in a certain way, before you actually act on it, you can think how you have responded in similar situations in the past. And when the market behaved this way, say 5, 10, 15 years back, at that time, what did you feel and how did you react? And also by observing what others are doing. So I think thinking about how you think or thinking about how you're feeling, it has a lot of clues. So don't waste your time predicting where market will go. Invest some time in observing how you are responding, and more importantly, how people around you. The last thing, like say, Mr. Buffett is often quoted to have said that, be greedy when others are fearful and be fearful when others are greedy. You know what? The most important word in that statement is others.
Yeah.
And the clue to success, the key to success is not to be part of others. And how can you ensure that you are not part of others unless and until you observe what the others are actually
and you
doing.
are in that cohort essentially, because you cannot remove the experience of fear and greed. And look, this is written about a lot. Fear is not or conquering fear is not the absence of fear. It's what you do once you have experienced that fear. And so therefore, even from an investing perspective, from a lens, you have to understand what that feeling is. And it's quite a I said visceral. I'm telling you, I was on a beach and I looked at my phone and I'm like, no, what? And my wife was looking at me, and we were pretty much one year in from our marriage, and she'd given me all the money to manage, and I was like, how do I tell her that it's down 35%? So it teaches you stuff, doesn't it?
Yeah, absolutely. See, I mean, if you don't want to be part of the others, as I said, of course, we are all part of the others. We are all part of the crowd. But every once in a while, our past experiences and what we glean of what the others are doing should enable us to kind of a little bit, stand apart. Because as they say proverbially, you buy when there is blood on the street, including your own.